Yeah. Right. Namaskar and hello friends. This is Rohit Devangan presenting to you Candlestick Patterns, Basics to Advanced Strategies. What we'll try to cover is basically the general concepts, and we'll touch upon about 50 plus patterns which are available in topstockresearch.com. Right. So before we start, I would like to thank you of taking time out on a weekend, especially if it's a festival, Mahashivratri, and also some of you are who are cricket fans. They're taking time out for this session. It's very much appreciated. Yeah, I hope that it's a great encounter there as well, India Australia. I think it's in a very critical and important phase. Okay, so before getting into other things, quickly jumping into the areas of table of content, what we'll be covering: candlestick basics, candlestick patterns to identify trend, reversal, continuation, and so on and so forth. Some of the terminologies that we have heard in price action session. Advantages of candlestick patterns, candlestick pattern categorization. What it means is what is a single candle, double candle, multiple candle formation. Advanced strategies and reliabilities. One candlestick pattern with a deep dive of hammer. Two candlestick patterns, deep dive of bullish engulfing and few more. Three candlestick pattern, morning star and its variations. Multiple candlestick patterns. And then we'll cover about 50 plus candlestick patterns which are available in Top Stock Research. Then we'll help you to create candlestick patterns using our DIY screener, so that you are not restricted to these 50. You can create any number of candlestick patterns that fulfills your requirement. Backtesting. How do you backtest these patterns? So currently we have exposed two mechanisms. One is time machine, where you can go back in the history and see in the screener that what candlestick pattern was formed at what time. And second is historical pattern finder. So if you are interested in a particular pattern, you can go back in the history and see that how many times that particular indicator or pattern is formed on a stock of your choice. Then finally, TSR all-in-one. So this is a platform where you'll not only learn, you'll screen, test, view. So basically any of the activities that you typically perform as an analyst is available in this platform, Top Stock Research. So learn, screen, test, and view in charts. Estimated time for this session is about 2 hours. So it can go slightly above or lower depending on the kind of comments and the questions that may come into this session. All right. So having said the basic tone, I'd like to go ahead and present to you the candlestick patterns. Right. So also the session would be primarily in English. Right. I'll try to keep English as simple as possible. And if you have any particular difficulty, you may write questions in Hindi. I'll try to give answers in English, and then perhaps some other time we'll have a session on Hindi as well. Right. So candlestick patterns, right? So basically, first of all, why do we need charts? So candlestick patterns are typically part of a charting platform, right? Why do we need charts? Is because looking at the data can be very confusing. So basically, as it is said, right, an image speaks 1,000 words. So basically, looking at the data in tabular format is a great thing. Not everybody can comprehend very fast. So basically, to give you a much clearer picture, these numbers are plotted in chart. So one of the simplest and most common one used across the industry is the line chart, wherein you plot the chart using the close prices, and it will give you a clear indication, right? The price has gone up, came down, gone up, and then coming down. So there are major and minor trends which we have seen in price action session, right? That keep on forming, right? But it has a limitation. All that it cares is basically the close price. If you want to know more than this, right, the entire set of information in a chart, then perhaps you would be looking at another kind of chart, OHLC or candlestick charts. So the topic here is candlestick chart. So we'll quickly jump into that, right? So candlestick chart looks like this. Initially, it may look like little overwhelming. It looks little complex what this is. So the idea of this session is to understand these things, to simplify it in such a way that it can be understood by almost every beginner, and also basically will drill down into a single candle to multiple candle and the candle pattern formation, what are the typical strategies which you use, and how do you screen these strategies in topstockresearch.com, right? So candlestick basics, right? So what does it do? It represents price movement of a stock in a graphical manner. We'll see what those things are. So basically what it covers, a candlestick covers 4 parts. One is the open price, the second is close price, third is high, and fourth is low. Why this is important, we'll try to cover in subsequent session, but for the time being it's important to know that it covers 4 points: open, high, low, and close. Now when the close price is greater than the open price, when the close price is greater than the open price, the candle is marked as green, or in some cases, some other charting platform, they can use different colors like a hollow candle, or some other colors which a different platform uses. What we use is green candle when the close is greater than open. Okay. The second one is basically is bearish candle, where the close is lower than open. What it means is the market has started at this point, it has gone all the way up here, it came down all the way to this point, and then closed somewhere around here, right? So when the close price is lower than open, then it is formed as a red candle, right? The third part would be is that the market opened at this point, it went all the way up here, came down, and then closed almost at the same point, right? So this is the third variation. So 3 variations. Number 1 is close greater than open, second is open greater than close, third is open is almost equal to close. These are 3 candles, right? So the case where the close is greater than open is called bullish candle, marked as green. The second one is marked as red, wherein the close is lower than open, and the third one is basically generally a cross sign or a plus sign over here, and this is called as the doji candle. So things to note as bullish, bearish, and doji candle, right? Now let's try to understand how do we make better sense of these candles, right? So think about this case. Think about this case. The market opened at this point, perhaps it has gone little lower, right? So it opened almost at near its low, and during the course of the market, right, it went all the way up and closed at a higher point. So what it tells us during the market session, right, there at whatever point it opened, there was far more positive signs in terms of the bullishness during the course of the period. So if it is a daily candle, so market opened somewhere around this at 9:15 or something, and it closed somewhere around 3:30. So what this candle represents is that overall the bullish were or the bulls were in control, and they took the market higher, right? So just looking at a point, if it were a simple line chart, it would have shown something like a single point, right? But when you're looking at this and where this particular pattern is formed, right, so it will give you a lot more indication. It will give you a lot more indication that how that particular trading session went on, right? So in this session, there was a lot more optimism in terms of price going higher. In this case, there was pessimism, and in this case, the market started at this point. It went high, it went low, and came back there, right? So this is a level of indecisiveness, which is also represented as doji candle. Okay, I hope that with this very basic understanding, you now know what are the 3 typical kind of candles are, right? Before we go into next thing, right? So before we really move on to the next part, right? Do we have any questions? Let me have a quick look if there's any question out there to understand it. No. Okay, great. All right. So so basically the next important part of candlestick patterns are trend identification, right? How do you identify trends? So candlestick patterns can help you to find bullish reversal, right? Can help you to find bearish reversals. It can help you to find continuation patterns, and it helps to find that where the zone of uncertainty or the basically consolidation zone is, right, where the market is not clearly moving in a particular direction, right? So use these candlestick patterns. They can be a single candle, they can be multiple candle, which we'll cover in a short while. But for now, what you need to know is that these candlestick patterns can help you to identify trends: bullish, bearish, trend reversal, continuation, and basically consolidation. So these are 4 typical categories of candlestick patterns, right? What are the advantages of candlestick patterns? It provides information more than just a price point. It can, so patterns are much easier to recognize. During the course of this session, what you'll get is to identify the trend and to know more about the patterns. So basically, these are very easy to identify. Once you start understanding is, identifying is much faster compared to the other basically charting or the data tools. Number 3 is it helps you to find the trend reversals, and so on and so forth. And they also tells the latest market mood. So what latest market mood is basically what time, what price the market started and what price the market ended, right? So that gives you a general direction that where the market is heading and what is the general thinking in terms of market. They can also be used in conjunction with other indicators, or they can be used with basically other price action patterns, right? So on its own, it can tell you a lot of things, but it can be combined with other indicators and patterns, right? So basically, let's start with very simple one. Just what a single candlestick pattern tells you, right? What a single candle tells you, right? So single candle, one of the pattern is a hammer pattern, where the price opens at a certain price, generally lower than the previous one, and it goes down to a very low level, and then suddenly a lot of bulls come into play, and they take the price higher. They take the price higher and closes much above the previous open, right? So what does it tell? In this particular race, the bears were in charge. They started at a price, and then they dragged the market down to a very low level, and then bulls came into picture, and they retaliated, and they came and they moved the market higher than the open and slightly above the open, right? So this will typically look like a hammer, typical hammer that we use, right? So what it tells you is that initially the bears were in control, the market was going down, and towards end of the market or towards end of the particular cycle, the bulls came in, and they were able to overcome the initial obstacle of the open price, and they moved up. So it is a bullish pattern, right, which tells a lot of psychology about this particular formation. Okay, so it looks pretty much like a hammer. That's why it's called a hammer pattern, right? The second one, which we have briefly seen in the previous slide, is basically the price opens at a price, the stock open at a particular value, goes up or down, whichever direction, and then it comes back and closes at the same point. So what this tells you is that there's a lot of indecisiveness. Neither bulls nor bear are in control, right? So what it typically means is you have to wait for some more patterns before you go into your trading cycle, right? Trading decision. Number 3 is Marubozu, or a long candle, where open is equal to low. That means price opened at a certain value, or stock opened at a certain value, and it moved only in one direction throughout the course of that period or the day, right? It moved only in one direction and closed it up at a higher price. So this clearly tells you that who was in control and which direction the price is going on. So if any of you want to guess on what this particular thing would mean, you may want to put a small comment on this, right? So that it will help us in validating with your understanding, right? So this is again a very important one. We'll have a deep dive into this one as well, along with hammer and doji. The fourth one is pin bar. Pin bar is pretty much similar to basically hammer, but the difference between hammer and pin bar is basically on this, either there is no upper part, the upper part. In this case, you can have an upper part as well as lower part, but the body is very, very narrow. So what it also tells you is a lot of indecisiveness. One of the important things which I have missed out to mention, maybe this is a good time to get to that, is basically the candle, right? The candle has an open, has a close, it has a high, it has a low. So the area between open and close is represented as either red or green. That is called candle body, and the part which is above part, right, a small line above this or a line below this, these are called wicks, candle wicks, right? So basically that's one of the terminology that I'll keep on using during the course of the session, right? So candle body, candle wick, upper wick, lower wick, right? This is how the sessions I'll use these terminologies quite often in this session, right? So these are 4 typical a type of single candle pattern. Single candle pattern can also give you a lot of information, right? How the price and other things are moving. Okay. Then the next one is two candle pattern. So if you're seen in this one, a single candle can give you a lot of information, right? Like who is winning the race, bulls or bear, right? Or where the market had started, or where there's consolidation or other things, right? Two candle can give you a lot more information, right? So it uses two candles to give you a signal or an indication. This is one of the pattern, which is engulfing pattern, where the first pattern is there, or first candle is there, the second candle completely engulfs. That means it opens below the low of this body and closes above the high of this body. That means this candle is completely surrounded by a candle which is subsequently made, right? So this is called engulfing. We'll go a lot deeper into this particular pattern or in this candle in a short while, right? The second one is just opposite of that. This is called Harami pattern. In this one, you have a large candle, and the second candle, which is opposite the color of the previous candle, is formed within the body of the previous candle, right? So this is called Harami pattern. The third one is piercing. What it does is you have two candles. The second candle is formed below the first. In case of bullish, you have a red candle. The second candle is formed or is started below the first candle, and then it goes up. It goes somewhere around the middle of the previous candle, right? So two large candles, and they form in this particular pattern, right? What it means is, how do you want to understand this pattern? That will come in a short while, right? How do you understand it? But if you have any guesses how what these patterns means, you may want to put a comment on it. Okay. The third one is again a pattern wherein it is two candle, where the bodies of these two candles don't overlap, or they overlap in a very, very small part, right? So this also means a lot of things, which we'll cover in a short while. Then the fourth one is you have two candles almost of equal length, but just opposite the color, right? So if this candle is green, then the second candle is red. If this candle is this candle is red, this is called green, right? This is called Tweezer pattern. So revising a bit of it. First pattern is there's a bigger candlestick pattern. There's a bigger candle compared to the previous candle. It completely engulfs. This is so if this one is green color, it is bullish. If this one is red color, it's bearish. The second one is if the second candle, two candles of opposite size, opposite color, and the second candle is within the previous candle, right? So depending on the color, it can be either bullish or it can be bearish. The third case is piercing, wherein you have two candle of opposite color, and then the second candle starts below. In case of bullish, it starts below and ends somewhere in mid of these candle. The fourth one is two candles opposite color, and there's hardly any overlap, or very small gap, or very, very minimal overlap between the two candles. This is called kicker pattern. And Tweezer, two candle of almost equal size, opposite color. Best case scenario is either in the top of the market or in the bottom of the market. Right. Third is three candle pattern. Three candle pattern is again, it adds little more complexity. So basically you have three candles set up. One of them is morning star, abandoned baby bullish, morning doji star, white candles, three white soldier, bullish Tasuki gap, right? And three inside up. Now, without giving too much of information about this at this point of time, what I'll do is I'll give you a few seconds to just go through it, see if any of these candle makes any sense, or are you able to identify, recognize any of the things based on the single candle, and if it means something, right? Obviously, one of the things which we have seen is Doji, right? Which a single candle. There are certain long candles out here. There's a wick, there's a red body, green body, right? Upper wick, lower wick, certain trends, right? So these are typical things. Without going too much deep into it immediately, what I'll do is I'll just give you guys few seconds to just go through it, and when time comes in basically in later part of this session, we'll go deep dive into all these patterns. Okay, we have a question, right, from Wasim. Bullish piercing means it is trend reversal at the end of the trend. Yes, if it is at the end of the trend, it is a trend reversal pattern, Wasim. All right. So now we go into multiple candlestick pattern. So this will be a little more difficult for some of the beginners. Don't worry. During the course of this session, you will be in lot better position and comfort level to understand these patterns. One of them is island reversal patterns, right? The second one is basically breakaway pattern. It consists of either four or more candles, right? So it gives you lot more insight to not only that particular candle, previous candle, but last set of few candles, and how do you trade it. The more number of candles, the better the quality of results are, right? So it's important to not only know the single candle, double candle, but also to know about the combination of candles, right? Three line strike, then Hikkake candle, right? So these are few patterns that we'll try to cover in the subsequent part of this session, right? All these pattern screeners are available in topstockresearch.com, right? Now going into one candle pattern, right? So one candle pattern, first what we have seen is hammer. We have briefly discussed what hammer is, right? Where the body can be either red or green. It has a small body on top, little or no wick on top, and a long wick at the bottom. The second one is Doji candle, which we have gone through it. Open is equal to close. You may have a small wick up and small wick down, right? The third one is long candle, wherein market the length of the body is pretty huge, right? Pretty huge. If you compare to this, the body is pretty huge. If open is equal to low or open is equal to close with long body, it is called Marubozu candle, right? It can be bullish or bearish depending on the color of the candle. Then next is pin bar. Pin bar we have briefly touched. It has a very small body plus wick on top and wick at bottom, right? Generally one of the wicks are long, or both the wicks can be long, right? Small body. Okay, so one candlestick strategies, what we'll be covering here is hammer. We'll do a deep dive of hammer, Marubozu or long candle, Doji candlestick pattern, pin bar, right? So starting with hammer, before we go there, let me see if there's a question or two which requires attention. Otherwise, we'll continue with the pattern. Yeah, so Indra will get into the three candle pattern when we go into deep dive. That question is very good. Basically, difference between abundant baby bullish and Doji star, right? We'll get to that in a short while. Okay. All right. So hammer pattern, right? Hammer pattern. What is the number one? It is a bullish reversal pattern. As the structure itself says that the market opened somewhere here, it came all the way down, and the bulls started taking control. So in an isolation, this clearly is a race between bulls and bears, where the bears were in control during some part of the session, but towards the end of the session, end of the particular period, the bulls came back, and they have taken the control, right? This particular structure can be red or green. Whichever the case is, it is still bullish. Even if it is red, what it clearly tells is that during most of the time it was in the downward way area, and it closed somewhere at the top with a very small body. Okay. The reliability of this pattern in isolation is about 60%. It is a single candle pattern, but best used in combination of multiple patterns, which we'll see in a short while. Right? What are the different variations of this candlestick pattern? You can have a standard hammer. You can have an inverted hammer, which is just opposite of it, where the body is small, but the upper wick is much bigger compared to the lower wick. Lower wick either is not existent or is a very, very small one, right? Which can be generally ignored or can be ignored. Okay. Number three is basically inverted hammer, where the color is green. And fourth is hanging man, which is basically it is very similar to hammer, but the color is different, right? The color is red, but it's pretty similar to this, right? Now the occurrence of these patterns, right? The occurrence of these patterns, depending on where the trend is. If you have attended the price action session, then perhaps it will be much more easier. If you have not attended, what we are trying to do here is basically trying to make it as independent and as possible. But we would recommend you to go to price action session or the video which we have uploaded in YouTube, a session conducted about a couple of weeks back, of 4-5 weeks back about, right? So these are 4 variations. Now we'll in the coming time, what we'll do is we'll try to understand what is the best structure for you to go and enter into trade based on their strategy, their structure, where these patterns are made, and what are the typical strategies. Okay, reliability. If it is just a green candle, right? If just a green candle, its reliability is 55%. So don't jump into one single candle. If you see a single candle, don't jump into it. Its reliability is about 55%. The idea here is, how do we increase your reliability of your trade, right? Or how do we improve your risk and reward ratio, right? So that's what we'll do. If it is red, then obviously it started somewhere here, it came down. So it started here, and then it came down but couldn't go beyond this opening price, right? So reliability of this particular red hammer or hanging man is lower. Number 3 is if it has a very long wick. If it has a very long, so this is long wick, this is very long wick. If it has a very long wick, that tells you that the market went into a very low, but somehow it came back. So the movement between this point to this point is pretty long, right? So it gives you a better reliability, right? It gives you a far better reliability. That's why it is about 62%. So what you should be looking at is not only hammer, but how long the wick is, what is the color of the hammer. Number 4 is if it is with long wick and high volume, right? The volume tells you is that even the market came down, a lot of buying pressure came in and it took the market up, right? So along with the volume, it gives you a much better, it should give you much better confidence. The reliability increases. So single pattern, 1. Number 2, whether it is green or red color. Number 3 is the wick. Number 4th combination is basically how much market conviction was there, or how much market participation was there to drive the price from this point all the way up to this point, right? So this is a pretty long movement, right? So that should give you a lot of other confidence in the pattern. Then another one is, where is it formed, right? Where is this pattern formed? If the pattern is formed at downtrend, right? So market is coming down all the way here. It opened somewhere here, came all the way down, and then somehow there was a strong buying pressure, or the bulls got into their game and pull the market up, right? So basically negating the downtrend. Number 1, downtrend was much more intense because it came down all the way here and somehow bull came in, right? So this itself is a very good pattern. If you are a very aggressive trader, then perhaps towards end of the, so if it is you are doing on a daily candle, then perhaps towards end of the day you can get into position, or if you are slightly conservative, then you have to wait for another candle which is to be formed here, and then that's the confirmation candle. But this itself should give you a lot of confidence on this pattern, right? So pattern is about 63%. Number 4 is uptrend. If it is an uptrend and this pattern is formed, that means the market opened at this point. Again, it went up, moved little up here, and then came down. So if a hanging man is formed at uptrend, then the reliability increases. Remember, guys, in the previous one, the reliability of this red hammer or hanging man was 45%, but where it is formed should give you a lot better confidence. If it is formed at uptrend, then the reliability increases significantly, and obviously the volume and other things also comes into picture. If this pattern is bouncing back from a support level, right? If it is bouncing back at a support level, then your reliability or your confidence should be even higher. So in this particular case, it went up there, and this the pattern or the hammer is formed, and it retraced from its support level. Retraced from support level can be any of the support levels, can be moving average or Fibonacci or basically simple trend line. Any of these things are there, it is retracing. It should give you a lot better confidence that, okay, this is it should validate your support level and should give you a better confidence. Reliability increases here. Number 4, if it is sideways market, right? If it is sideways market, the hammer loses its significance, right? No point of just showing that a pattern is there and then it gets there, right? What matters is, number 1 is the structure of the candle, number 1. Number 2, where it is formed and how it is formed, right? So that should give you a lot of other things, right? So the reliability in a sideways market, goes down below the standard hammer. So if the standard hammer reliability is about somewhere slightly above 55 odd percent, if it is sideways market, its reliability goes down to 40%. Okay. Hammer pattern strategies, right? There's some other pattern strategies that we have. If you guys have attended the sessions on Bollinger Band, then you'll understand Bollinger Band, or basically SMA, which we'll be taking in next week. And the price action session would we have covered ground trend, support levels, and uptrend, right? So let's see some of the examples of hammer pattern, where it is formed and what is the reliability. Now, if you look at this one, right? So it is sort of downtrend, forming very close to the Bollinger lower band. Anybody who remember the Bollinger Band, 95% of the probability that the price will remain in this band, right? So in this case, it has breached and came back. It has breached the lower band, but it came back out here, right? So that tells, and the hammer is also formed. So near the support level of Bollinger Band, it should give you better confidence, right? So take the next one. So if you are one of those aggressive ones, you can get at the start of this point, keeping a stop loss below this price. Or if you want to get confirmation, you're a little more on in terms of basically conservative trader or less risky traders, what you should be doing is you should be waiting for the next candle. If it is a green candle and clearly above this level, then you should go and enter into a trade in this level, so that you can look to ride the wave, right? Another example is hammer at downtrend. So the primary trend of this thing is downtrend. A hammer is formed. So remember guys, the example that we've seen a while back. If it's in downtrend, it has gone further down. It opened somewhere here. It went down, right? And then what happened is it moved all the way back up to this level, right? So that means bulls are now getting into control. Aggressive traders may want to enter here, but since the primary trend is downtrend, right? So the caution here would be is not to get immediately on this. Wait for this candle to form. Either at the start of the candle, look at the content, or even before this candle finishes, somewhere in the intraday. If you see the movement is good, if the volume participation is also good, in this case it is not, but if the volume participation is good, you may want to enter somewhere in between during the day, or you may want the entire candle to finish and then enter somewhere around here if this candle opens in green, and then you keep a stop loss below this level, right, or below the head of this thing. That can be a good stop loss for this trading setup. Sorry, right? Hammer at downtrend. The next one is at support level. So in this example, the hammer bounced back from that support level. It briefly breached, right? But that's called as a false breakout. Briefly breached, and then a proper candle is formed, and then wait for the confirmation and take it out, right? So if you are an aggressive trader and you are buying somewhere here, then the support level would have to be a very, very strict stop loss, right? Or a stop loss below the body of this candle would be a stop loss if you are aggressive, but this should always be a very, very strict stop loss, the previous support level, right? You can enter here if you are less aggressive or less risk averse trader. You can get here into trade and go ahead. Another example that we have is at a downtrend, right? Inverted hammer at a downtrend, very similar to the previous one. Then wait for the confirmation candle and get there, right? In the previous examples, what we have seen is immediately after the confirmation candle, the price is going up, right? That will not always be the case, right? There will be some sort of consolidation between that. So even this pattern is formed, this small consolidation, and then market started moving up, right? So what you should be doing is, if you have entered here, keep a stop loss somewhere here. Give yourself some time, give your trade some time to see whether the pattern holds good, and then it has gone up, right? So not necessarily that immediately after a pattern is formed, you'll get those things. Sometimes there can be little indecisions, like few dojis which we see here, right? And then it started moving up. Another one, hanging man at top. So this one is a bearish candle, right? So there's an uptrend, hanging man on top, and then this hanging man on top. Then wait for the confirmation candle. Aggressive traders can get somewhere here, or more conservative should wait for this candle to complete and then go into the selling position, right? And then there's a downward movement out here. All right. Then hammer at a EMA support. If this so basically we haven't had session on EMA, which we'll be having next week. But EMA, or basically moving average rather, right, can provide you a lot of dynamic support and resistance, right? So if you see such a pattern is formed around the moving average level and it's retracing back from there, then that should act as a double confirmation, right? Looking at the volume is also high, the candle is there, it's bounced back from a certain moving average. It opened here, came down, briefly breached the moving average during the session, and then it closed above that, right? So this should give you a better confirmation. So the point which we're trying to say is candle is important, where it is formed, how it is formed. You can always seek supporting basically confirmation from the other tools like the moving average or support, resistance, price action, multiple things, right? So if you are familiar with the other things, try to mix and match things. That should give you better confidence. Okay. Another example that we have is okay. So basically we have covered all the examples. Now, what should your trading styles be? The entry point, depending on the aggressiveness. Immediately after the hammer is formed, you can get there. If you are aggressive, you are looking at the scalping side. What the stop loss should be, low of the hammer candle. Where you should avoid doing this is in the low volatility market, right? For little more conservative, less risky traders, you wait for the confirmation candle. In such case, what you should be looking at is swing highs. If there's no recent swing, which is over there, then what we would suggest is use trailing stop loss. Trailing stop loss can be 21-day moving average or can be lower of previous two candles, right? Lower of previous. So as in when the price moves up, for example, in this case, as in when the price moves up, what your stop loss can be is low of the previous two candle. So in this case, the stop loss would be this. In this case, the stop loss would be this. In this case, the stop loss would be this. So what you are doing is you are trying to limit your losses, but riding on the wave, right? So where your stop loss would have hit, it would have hit somewhere around this part, right? Lower of this thing, it would have hit somewhere around this part, right? So you would have got a nice rally, nice small rally using a stop loss, a trailing stop loss, right? So where should you avoid trading on this? You should low volatility market, and when the trading this is formed against a very long-term trend. If there's a very strong trend, then obviously just looking at the hammer, you should not enter. You should wait for the confirmation candle, right? Or also where should you avoid? In the sideways market, as we have discussed a while back, right? Some of the important targets can be swing highs, key resistance levels, right? Or retracements level, Fibonacci or Gann, whichever you use, right? So that will be a good trading guide for the hammer, right? Before we go into the next pattern, do we have any question or comment? Let me have a quick look at that. Yes, so there's a question question on 3 candle pattern. Yes, we'll be covering, Indra. And then, okay, low volatility market means is okay. So basically low volatility, I won't say market, or the stock that you guys are looking at it, where the movement is very low, where the movement is very, very low, or it is in typically in the sideways market where there are multiple dojis. For example, do you guys want to give me a suggestion of a stock which I'll try to get and show you low volatility market, right? Where market goes into what this one is Steel City. Okay, let me go to Nifty. Nifty, right? So Nifty, if you see there's a trend, right? The market is clearly moving up. You'll see long candles sometimes, very, very long candles. And in certain times, you'll see very low, small candles. In this case, for example, I'm just taking out here, right? They're very, very small candles. The volatility is low. And also in this particular, this thing, right? This is area of uncertainty where the market is sideways. In such market, candlestick will not give you very good results, right? Any of these patterns, not only candlestick, or most of these things will not give you very good results because it is in very sideways market and it's not making the big moves out here, right? It's very, very small moves. There's a screener for volatility or the price range. If time permits, I'll quickly give you a glimpse of what that is, right? The second one is a long candle, right? Or Marubozu, right? the reliability of this thing, right? If you see, the reliability of the previous candle was about 3.5 out of 5. Here it is 4.5. So that itself tells you that you should be looking at these candles, right? But again, like any other thing, you should not be looking anything in isolation. What you should be looking at is in combination or in context of the entire scope. Bullish reversal and continuation pattern, right? This is part of both reversal as well as continuation. It has a much higher reliability. It can be formed in downtrend, uptrend, right? The best is if it is formed in a trend, right? What this means is, in this case, open is equal to low. That means market started at this point. It moved only in one direction. It moved only in one direction and closed at a high. And if this candle is long, it should give you better confirmation or better confidence. The second one is open is equal to low. It moved only in one direction and it closed slightly below. High. But the general direction of this particular movement was bullish because it's a green candle. If it was a red candle, it would have started here and came down here, right? So generally, if you see, it is a one way game, either bulls or bears. In this case, it's green, so it's only the buying and its price is continuously moving in one direction with a very small or no wick. In this case, there is a small upper wick, there is a small lower wick. In this case, there is no wick. So the key is open is equal to low or very near low, and it's moving only in one direction, right? Very important and very powerful pattern. Then what are the variations of it? Open is equal to low, right? And it moved only in one direction or moved in one direction with small wick up there, small wick down, the third variation. The fourth one is just opposite of it, which is red candle. Open is equal to high and close is equal to low, and the other variations, right? Apart from that, there can be another variation where the wick can be on upper and lower, but it is a very long candle. It's a very long candle with very small wick. So this again is a single candle, right? Which can give you a lot of information that, okay, market started somewhere here and the bears tried to bring it down a little bit, but they were unsuccessful and it was a completely bulls game in this session and it went up and there was a small wick up there, right? So the longer the candle, the better the signal is, right? That means there was a lot of conviction and there was hardly any fight between the two sides of the buying and selling, right? It was one way, pretty much one way thing, right? In this case, bulls, in this case, bears. Right? What are the strategies? You can do it in price action ways. You can use indicators like moving average. You can use other technical indicators like MACD or other indicators, right? So let's go through the examples. Right? In this case, it was formed almost at a bottom, right? So if you see, there's a big Marubozu candle in a downtrend that should give you better confidence. So aggressive traders can go towards end of the trading session here, or little more conservative can get into this one, keeping a stop loss at this point and then ride into the wave, right? Again, similar to the previous ones, the timing or the place where this pattern is formed is very important, right? If it is downtrend, it should give you better confidence with a confirmation candle, right? If the volume is higher, then it should give you even better confidence. Another one, if this Marubozu is formed, so basically as I briefly touched upon, right, the moving averages can act as a great support and resistance level. If the resistance level is broken and it has gone much above that particular point, right, so it should give you better confidence. So there are two things which are getting formed, three things in fact. Number one is Marubozu is formed. Number two is a cross above the moving average. Number three is there's a volume confirmation, and already there's sort of trending up also, right, in this case. So this Marubozu is formed during the uptrend, a small uptrend, but uptrend. So there are four confirmations which should give you better confidence. So such will be a much better setup, right? Again, better setup doesn't mean that it will always give you profit. You have to always play with the stop loss, right? Stop loss can be one of the lower levels of the previous two candles. Similarly, just opposite of the uptrend, there's a Marubozu which is downtrend. So I don't think much needs to be explained here. Keep a entry point is mentioned here, stop loss is here, and then write the downward movement, right? This is bearish, just opposite of the previous one. Similar to that, in this case, there's a Marubozu. It coincides with another indicator, another powerful indicator, MACD indicator, moving average convergence divergence. So it's a bearish signal out here. So that should give you better confidence. Doji pattern, right? Now Doji pattern, it's an indecisive pattern. It is indecisive pattern. In an isolation, it will not give you much, but why there are 3 stars instead of 2.5 in terms of reliabilities, we'll come to know that what is the advantage of. It's not like a useless pattern. It's a very, very important pattern, provided it's formed in combination of few other candles, which we'll see in the coming slides, right? Doji means open is equal to close, right? Open is equal to close. There'll be a wick above and wick below, right? Wick can be long, can be short, but it has to have a certain wick above and below. Doji variation, a standard doji. Another doji is basically dragonfly doji, wherein open is equal to close, but there's wick only at the downside, right? There's no upper wick, but the wick is only towards the downside, right? Which also tells you a lot of things, right? So anybody wants to guess what this particular thing would mean? It opens here, goes all the way down, came back up here, right? So what should it represent? I mean, that should not be a very difficult task now for you guys, right? To see that who is getting in control. So from the standard doji, right? This doji gives you a lot better meaning, right? Wherein the bears dragged the market down and then the bulls came back and brought it back to the same level. So the pessimism, whatever was there during the trading hours, is gone away and it gone back to the previous state. The third one is just opposite of that, which is called gravestone doji, wherein market opened here, went all the way up here and came down to here, right? So it also tells you a lot of things, that who won the race, right? Nobody won the race, but at least the bulls or the bears got back to the level where it initially started, right? So it was bulls race during the market hours, initial hours, and then bears got into control and they brought it back to the same level, right? So it gives you a lot of information. Plus where it is formed, it also gives you a little more insight of where it is formed, right? And that should give you better confidence. Another exception of that is spinning top, where it is not actually open is equal to close, but open, the body, open and close are very near to each other, and there's a wick, up wick as well as down wick, long shadow or down shadow. Wick is also called as shadow, right? So we'll use these terms interchangeably, wick or shadow, right? So there'll be a long lower wick as well as upper wick, small body. The color can be red or color can be green, right? So these are again single candle thing. How do we make use of it? Like the previous candles that we have seen, the hammer, where it is formed, uptrend, downtrend, or along with the other technical indicators like super trend or RSI or MACD, or where it is formed, right? The trend. So if some of the terminologies like trend and other things are difficult to understand, I suggest you to go to the price action session, which we have conducted a few weeks back. That will give you the confidence. But generally we try to explain over here so that it's easy, even for some of you who don't know those terms. They can understand the basic concepts, right? So spinning top, where it is formed at a downtrend. It has formed at a downtrend. So this is not the place where you should enter. You should wait for confirmation candle before you get there, right? So that's one of the way of doing it, provided the trend is downtrend, right? Another one is spinning top at uptrend, just opposite of that. What team has got out here is what would be a good entry point, what would be a good stop loss, what would be a good swing low or the target. Swing low would be the target, right? First target. And what is the good exit point, right? So first exit point is a stop loss. The second one is where you should be really getting out of the stock, right? Whenever there is a signal which goes in the opposite direction, right? So near swing lows, it would be a good place to take your profits out, right? Spinning top, with spinning top, with super trend. So in this case, immediately after spinning top, the super trend is changing direction, right? Or the price is changing direction. It has become green. So you get spinning top along with super trend, this thing signal, right? So that should give you better confidence and comfort level. So mix and match candles, mix and match these candlestick patterns with whatever you are very comfortable at, whether it's support resistance or any of the technical indicators. Dragonfly with Doji, another example which is here. Basically you can mix and match various different indicators, right? Look at the trend, mix and match indicators. A lot of these things are self-explanatory, so it won't take much of time in each of the examples. Another example, team has got up. This itself is a good strategy RSI. If it is formed along with that in a downtrend, high volume, there are a lot of things which are working towards in this case, and the results is pretty much evident, right? It has gone up. So the more number of indicators which are suggesting out here, the better the confidence is, right? Gravestone Doji at uptrend, similar things. If it is formed at an uptrend, and then it should be coming down here. Okay. Now my colleague has mentioned to look at the comments. Give me a moment. Before we end Doji, we'll go into the comment session. Okay, pin bar is what we have seen, a typical pattern. We'll not go into pin bar in greater details, but it is similar to spinning top or hammer, but with a small body and long wicks in each side. Right, we have covered this extensively in a price action session. So if you want to understand a little more, then you may want to go there, but some of the examples are here. Right, where it is formed, uptrend, downtrend, right? Then what are the formation, the recent phenomena that should give you the better confidence and results, right? Before we go into two candle, let me have a look at the comments. Any indicator to view all the candlestick on trading view? Not sure what that means. Which moving average should we use, EMA or SMA? Okay, basically generally for short term I would recommend EMA. For long term, look for SMA. Okay, exponential moving average reacts faster because it gives weightage to the most recent prices. Simple moving average is very simple. So for example, of course we'll have a very detailed session on moving averages next week, but just look at it. The exponential moving average will give more weightage to the most recent price move, whereas simple moving average will give equal weightage to yesterday's price as well as 1 month's old price, right? So that's where the difference is. Faster reacting time is EMA and slower is SMA. Weighted moving average is another good moving average, which I would recommend a lot of you to use WMA along with SMA and WMA and EMA. Okay. Okay, Marubozu at any place is of value. It is, yes, Marubozu is itself is a very good pattern, right? What it tells you is basically, so if it is formed at downtrend, if Marubozu is formed at a downtrend, then for example, if this assuming that this is a Marubozu, right? It is formed at a downtrend, that itself tells that the direction is changed. If it is formed somewhere in, for example, somewhere in the sideways market, right? So at least during that trading session, it tells a lot of information. It tells a lot of information that where the market is likely to go. But in a sideways market, obviously it is better to wait or keep a stop loss, right? Unless there's a very strong volume which is completely getting in there, right? Is it trend reversal? If it is formed in downtrend, trend reversal. If it is formed in uptrend, then it is trend continuation, right? Uptrend should give you a lot better confidence and keep the volume and other things in this thing. Then implied by Dragonfly Doji. Okay, Swapnil. So the answer to your question, let me quickly go into the Dragonfly Doji. Right. So Dragonfly Doji, look at this, right? If it is formed at a downtrend, the market started somewhere here. It came all the way down here, right? So that means the pessimism, if it is in downtrend, the pessimism continues. The market is continuously going down. But somehow at the end of the trade, right, bulls came back and closed out here. So just looking at in isolation, right, this looks like, to me, looks like a, even though it is a doji, it is far more positive in terms of the upward side, right, or the bullishness side. If this pattern, or if this pattern was just reverse of it, right, like gravestone doji, so market came here, gone all the way up, trying to lose the try to gain the losses, but again came back here, comes back here, right, if this were here, right? So that is still a lot of pessimism. So Dragonfly Doji should be viewed as lot more optimism compared to the standard Doji, right? At least bulls were able to gain back the territory they lost during the trading session, right? So that's what this thing Dragonfly Doji would be, and just opposite of that is Gravestone Doji in the opposite sense. Okay, any other question? Shooting star is a bearish. We'll come to that about shooting star. Okay. All right. So going back to the two candles. Any other questions before we go into two candles? Right. So now we understand what candlestick is, right? Formation, what is the psychology behind, or what should you be looking at if a candlestick pattern is formed? What is the structure? What does it imply? And typically, which place is it made? Is it made during the highs or lows, or the trends, or basically the color of candlestick, the length of the wick, upper shadow, down, lower shadow, right? These are typical things that I believe that you are familiar with it now, right? The next is two candlestick pattern. In this pattern, so in the previous ones, you just see that one candle and you try to make sense out of it. Here they are combination of two patterns. The first pattern and the first candle and the second candle. Depending on the combination of these two candles, right, or two candles, it may give you a different set of meaning, right? So some of the variations of two candles patterns are out here. We'll go into each one of them one by one, right? So look at this candle. This is a red candle. That means the bears are in control. It's a smaller candle. It can be a very small candle, or it can be slightly medium-sized candle, right? But overall, the bears are in control, and bears were also started in control towards the formation of next candle. So next candle is getting formed out here, right? So if you see, it's opening somewhere here, right? That means the previous day bears are still the in charge of this particular price movement. They started the market lower. Perhaps it has gone down a bit, and then bull came in and they took the candle all the way above the previous candle body, right? Above the previous candle body. So bears in control in the next trading session also, but bulls came back strongly and took it above the previous candle. So what it means is they negated this entire price movement, this thing. Also, they negated the initial start of this candle and took it all the way up. So just looking at the psychology, who is in charge now? So if you guys remember the trends, basically here, if you see this micro trend, extremely micro nano trend, in fact, right? In this nano trend, who is in charge? The bulls are in charge, right? So there's much better buying pressure out here, which is taking the market higher, right? So just in isolation, this looks like a very nice pattern. A variation of this, there's a long red candle. Then the next day, bulls came in. They started above the close of the previous body, and they dragged it above. They could not drag it a lot to take it higher than this price, but overall the sense is that the negative field or the negative environment of this candle formation, right, is over, and bulls are somehow getting more optimistic and taking the price higher, right, over here. The third one is piercing. Very similar. The bears are in control. They drag the market down. They drag the market down further, and then bulls came in. They were not able to take it above the previous levels like in the engulfing, but they were somehow able to take it somewhere around the uh, middle part, right? So which tells the psychology in the race of the buying or selling, or the price getting down or going up, these bulls were able to basically take back some of the lost ground, right, in this phenomena, right? So this tells you that so again this is a bullish indicator. The next one is a kicker pattern. Kicker pattern, very similar. The price is coming down. The bears are completely in control. But next day, what happens is bull started at a price very similar to this one, or slightly above the previous day open, right? So the close is somewhere here. The next day opening starts here and closes above this point. What it means is this day the bull says that we are the boss. We start somewhere here above, almost at this level, and they drag the market above. Now if these two candles are big, right, then the impact of the previous candles, right, or the previous downtrend it seems to be over. That's why it is called kicker, right? So it's kicking the previous candle and taking it above there, right? So it's again a powerful pattern. The next one is Tweezer, which is again looks very similar to this, but it has a very different meaning. In this case, what happens is you have a candle, typically at the end of the trend, either at a uptrend or at a downtrend. You have a candle of a big size, and then you have another candle which is almost of the equal size, but just opposite the color. So if it is uptrend, you have a green candle. Then you have a red candle, just almost same size and almost at the same place. That means the trend is completely getting negated. So price is moving from here, gone all the way up here. Next day, again bull starts almost at the same price, but bull lose the control and is a long body. This is a very, very powerful pattern, right? So it's called Tweezer pattern. We have a screener for that also here in TSR. Right? Two candle pattern strategies. What we'll cover is engulfing, deep dive, and then we'll cover Harami, piercing, Tweezer, kicker, right? All the 4 or 5 patterns that we have mentioned out here, right, with examples. Before we go into engulfing pattern, any questions? There's a question, right? Two candle pattern, bullish or bearish engulfing, right? Yeah, we'll cover to that. We'll come to that, right, in a while. So what is the reliability of this pattern, engulfing? The reliability is higher than Doji, but slightly lesser than Marubozu, right? What it tells us, I've briefly explained this. This is a 2 candle pattern. What should you be looking at? Other things which should be, if it is formed in downtrend, it is a good pattern. If it is formed in the top, in the uptrend, also it's good, right? But the best case scenario is if it is formed in downtrend and this pattern is formed with long body and with good volume. Right? Bullish engulfing reliability as per the structure. If it is a standard pattern, right, formed somewhere, its reliability is about 63%. If it is formed with higher volume, the reliability increases to about 70%, right? So higher volume tells you the conviction that the market really feels that the price should go up, right? If it is a small volume, then it can be, it should be seen with a lot of caution, right? If it is engulfing, high volume, long body, the confidence should go higher, right? The confidence should go higher. If it is in strong downtrend, then if the downtrend is really strong, right, then it is basically just looking at this pattern may give you negative results because the primary trend is very much down, right? What you should be looking at is a confirmation candle, just to be sure on that. Otherwise, you may end up in loss-making trade. If it is near swing low, the confidence goes up because the swing low will give you that good kind of support, so the confidence should go higher. If it is at a support level, the confidence should also go higher. If there are multiple points in the trend line, the confidence should go higher, so it goes to 68%. If it is an uptrend, similar to Marubozu, even if the bullish engulfing happens in an uptrend, that should give you better confidence. It's a continuation pattern. In this case, it is a reversal pattern. In this case, it becomes a continuation pattern. Then if it is in sideways market, best to avoid it, right? Or low volatile market, best to avoid it, right? Then if it is, now this one is important, right? If the previous resistance is broken with this pattern formation, first of all, the resistance trend line is broken, that it's a very good signature, good signal. Along with that, if this pattern is formed, then it should give you a lot better confidence, and it should give you a much better reliability. So if you see, the highest reliability is if it is formed in uptrend, if it is formed in, if the resistance is broken, and also in the previous ones, what you should be looking at is length of the candle and the volume, right? So that should, all these four things should give you a lot better confidence. All right. So engulfing strategies. Next, confirmation candle, resistance levels, support level, trends, other technicals like moving average, RSI, MACD, and moving average crossovers. We'll cover that in a short while. Now, if you see this example, right, this was the recent swing high. This pattern is formed at a downtrend, right? A nice engulfing is there. Plus, you see volume is slightly increasing. So you get multiple things. One is downtrend, engulfing is there, pretty long body compared to the previous bodies. It's perhaps the widest range candle in last 20, 15 or odd candles. So that should give you better confidence. And then you can get here, or you can wait for a confirmation. The confirmation happened here with a gap up. That should even give you better confidence. So first, your first target should be this one, recent swing high. But if you see a trend is nicely moving, you can follow a concept of a trailing stop loss. It can be either a moving average, or it can be low of the previous two candles, right? So if it is below low of two candles, if you had followed that, you would have got results all the way up to perhaps this level, right? Around this point. So if you just follow that low of previous two candles in a nice uptrending market, or I mean, two is not like something which should always be looking at. You can look at, you can adjust it with other numbers that suits you. You can use backtesting to see what those better numbers should be, right? Then another example, if it is at resistance breakout, then you see the volume is also good, resistance breakout, right? Then that should give you better confidence. And then again, what you, in such case, if there are two very strong things, then what you should be looking at is basically, in fact, three strong things are here. What you should be looking at is basically a trailing stop loss rather than fixed profit, right? When we say all these things, right, we have a DIY screener, do-it-yourself screener, where you can mix and match multiple things, right? The candlestick pattern, volume, and few other, quite a few other technicals and fundamentals. Resistance levels, you can apply all those things in a single this thing. Okay. Then engulfing at a support level. So this place, engulfing is happening at a support level. There's a slight increase in volume out here. Either you get here, or you wait for the confirmation, and then you'll get a nice move out here. Okay. Again, at a strong downtrend, it's best to avoid it, as we discussed. If it is a strong downtrend, right, what you should be doing is you should be avoiding, but in either you should be avoiding if it is pure this thing, or you should be looking at more confirmation. So even though trend is downtrend, you'll see that some sort of consolidation is happening. So in this small micro trend or a smaller trend, it is sideways market, so it's a better situation. If the volume is good, you can get to a smaller things, smaller output, and or if it is strong downtrend, best to avoid it, because the market primary movement is downward, right? So what you should be doing is you should be applying very, very strict stop loss, because you are trading against the primary trend. Right? Another example with moving average. We have seen similar things in the hammer, right? So or other doji. So again, mixing and matching with technicals. This is RSI rising above 30, right? So mixing, matching with technicals will also help you here. With another indicator, engulfing with another indicator. just gaze through it. I don't think we should be spending too much time on this. It will be pretty much repetitive. Another example, right? Moving average crossover. All right. Trading guide for this is basically what kind of users you are. Either you can get into, if you are aggressive, just get into immediately after the engulfing is formed, or what you can do is you can wait for confirmation candle depending on this thing. Targets, again, for scalping, just go for the size of the candle. You can go for recent highs, resistance level, and other support or resistance levels. Stop loss, low of the engulfing candle, trailing stop loss, prior to candle low, or a moving average, what you typically work on. Where do you avoid? Sideways market, typically avoid it. Avoid playing against a strong trend, either long or short trend, right? And when the volume and other confirmation is not too good. Okay. Before we go into the other patterns, let me quickly take you to what do we have in top stock research, right? Now, in top stock research, all these patterns are pre-created for you. So what you need to do is go to my.topstockresearch.com, go to into candlestick screener. For example, if you're looking at bullish engulfing, go to candlestick pattern, go to engulfing, bullish candles, go to engulfing, choose a tick of your choice. Here we have chosen, or by default it is end of the day. So let's look at that. Let's look at these candles, right? Or these four patterns are formed in blue chip. Let's increase the scope to maybe NSE 500. So these are pre-built screeners available for you. Maybe I'll just keep it simple so that we see only limited set of information rather than seeing a lot of information. All right, right? So these patterns are formed. These engulfing patterns are formed. What it tells is where it is. It is an uptrend, downtrend. So for example, this one is formed in a downtrend, right? So if you want to see this pattern, the engulfing is formed in a downtrend, right? Nearly support level, right? Volume is not too good, right? As it indicates out here, the volume is not so good, right? You see the next engulfing pattern, again, doesn't look like a very long body, so not a great pattern. This one looks slightly better. It's formed in uptrend with a lot of volume confirmation. So this would be a better candidate. It can be looking at the recent swing levels, right? First target can be here, second target can be here, third target can be here, depending on the trailing loss that you guys are looking, right? So third target can be here, and then you have to look for the trailing stop loss or the T-2 low, right? That would be a good one to look for, right? So this is a screener. Will it not only will give you the patterns, but it will also give you a brief idea about where it is formed, where the volume is up or low. So if you just want to see whether if it is with volume jump, there's hardly any. Okay, so the bottom ones are with volume jump. So if you see Timken, you see that engulfing is formed with long volume, right? Go to the previous one. Again, it is with much better volume compared to the previous ones. Go to the other one. Again, it's a volume jump, right? So this should give you better confidence. Okay. Now these are pre-built screeners. What you can do is you can go into the previous results also if you want to see that is this a good pattern before getting into trade. So go and look at the previous candle. So these are the ones where there was the engulfing happened in the previous candle. Look at the volume jump. So it was with good volume jump. So over here, despite the market was bad, it didn't go down below the previous candles, right? The second one is engulfing happened in the previous candle. What we are looking is back testing, right? Looking at the previous candle. It happened with good volume, and despite the market going down, it has gone up. So it was like buckling the trend of the general market, right? So in this case, the pattern was good. Right? Another example, engulfing happened here, right, with better volume, and next day again the market is up. So there's some money which can be made using these things. These indicators, what we have, or these basically the candlestick patterns. There are quite a few candlestick patterns available here. You can work on any of the ticks, right? You can work on any of the stock basket. If you're looking at FNO stocks, you just go to FNO stocks, So there's only one which is with volume jump. So Dr. Pathlab on the previous tick, let's see on the latest tick, there are quite a few, right? With volume jump, they have these these four ones, right? So Grasim, you see with good volume. Again, this is with good volume on an uptrend. Again, a very good signal, right? With volume and uptrend, that should you can be looking at a good this thing target level like this, right? Previous swing high, so on and so forth. So these are pre-created using a fixed set of formula. You can go and do the back testing. Also, what you can do is you can go and you can create your own candlestick pattern, right? So candlestick pattern, we have created certain candlestick pattern, so which is bullish engulfing pattern, right? This is totally custom made pattern, right? This is purely custom made pattern. So what we have done is whatever the basic theory of candlestick pattern is, right? Where the latest day close should be above previous day open. Latest close should be above latest open. That means this gives you green candle. Then you can add previous day close should be below previous day open. That means previous candle should be red candle. Latest candle, latest open should be greater than previous close. This is the third condition. This is the fourth condition. So when we look at this candle, there are quite a few candlestick patterns which are formed. Very, very theoretical patterns, right? So this is one pattern which is formed. This is the second candle which is formed, and so on and so forth. So this is how you can create custom candlestick pattern. Now, if you want to mix and match other things out here, for example, you want to see that the volume is greater than the previous day volume by at least 100%, right? That means latest volume is at least twice the previous volume. So you can further add things out here, right? Further add things out here. So what you do is, first is you create your candle. Number two is you can mix and match more strategies out here. So this is where you see that it's happening with much higher volume compared to the previous volumes, right? Previous volumes, the volume is at least double the previous volume. What you can also do is, if it is formed at swing levels, right? So basically, when you say that swing range, right? So it is formed within 2-week low, made within, let's say, do this and 2-week low, let's say, or within 1. So what we are doing is, first is candlestick pattern. We have created our own candlestick pattern. Number two, we have added volume. Number three is we are seeing that whether it is jumping from the swing low. So if you see the example, this is formed during the swing low, a long candle. So this should give you better confidence. Volume is higher than the previous volume, long candle, and the swing low. The third, if you feel that this condition is not giving you results, you can pause 1 or 2 candles, right, and see if the results, what the results are. So you see that the swing low was a more stringent rule. That's why you are getting lesser candles. You can go for either pause these candles, or you can disable these candles, right, the way you want. What you can also do is, again, I'm removing the volume. If you want to see that the candle length, right, the gap between the previous candle and the lowest candle, right, the gap between the lowest open and this thing is greater than 2%. So just looking at it, how many results are we getting? The results we are getting is about 15, right? So what I want is latest candle to be pretty long, right? You can customize your own candle. So what I'm doing is I'm saying that latest close should be at least 2% above latest open. So this should give you a much longer candle. Number of results that we are getting is about 15. Let's see how many results we get with a long candle. So it's 11 candles. So you see that latest candle should be pretty long candle, right? Should be pretty long candle, right? On top of it, what you can do is you can say that the previous candle should be at least 1%, right? The gap between previous and latest, previous close and open should be at least 1%. Go and click there. You'll see that there are 2 long candles coming in side by side, right? 2 long candles coming side by side, right? So which should give you even better confidence, and the volume is also better out here. So this way, what you can do is you can mix and match your own, you can create your own candlestick pattern, mix and match with other things. You can also go and add maybe, let's say, RSI. For example, if you can go and add RSI greater than, let's say, 60%, 60, right? Look at this. This is how you can incrementally build your own pattern, right? So very, very powerful to build. if you want to just utilize candlestick pattern, the built-in pattern along with and other things, what you can do is you can go into chart patterns, add bullish engulfing. You select whichever pattern you are looking at, bullish engulfing and this thing. So you can select any of the three patterns which is getting formed along with other conditions. Maybe the latest price greater than the previous close by at least 2%, right? So what you're looking is any of the three patterns, gap up, engulfing and Harami pattern, with price gaining by at least 2% compared to the previous day. So when you look at this, you'll find there are 12 stocks. Some of them are gap up, some of them are engulfing, and some of them are Harami. For example, in this case, it's a bad example, right? So if you see, this is a gap up, nice gap up, right? So this is again, there's an engulfing pattern. So what you can do is, you can mix and match multiple different things along with the candlestick pattern. So feel free to choose any number of patterns along with the other indicators or parameters of your choice out here. Okay. Getting back into this, the second pattern, which is Harami pattern, we have briefly touched upon it. In this case, you have a big red candle and a small green candle, which is in case of engulfing, this engulfs this one. In case of Harami, it's other way around. The previous candle is almost like engulfing the latest one, right? This is called basically bullish Harami pattern. Reliability is still good, right? About 3.5. The best place is in downtrend. Market is coming down. This pattern is getting formed, and it should give you better confidence that market can reverse at this level, right? Some examples, again, mix and match various different things. Like other technicals or other basically price action, support resistance levels for this also, right? Third is bullish piercing. Bullish piercing has better reliability compared to the bullish Harami pattern, right? We look at this, two long candles. First is red followed by green candle. The green candle starts much below the previous red candle and goes and closes at least above the midpoint of the previous candle, right? So if you look in isolation, one long candle is good enough, right? Remember the session we had a few slides back, right? So in this case, it is combination of these two that should give you better reliability. And if it happens at a downtrend, it has a much better chance of doing it, right? Again, when I say downtrend, is a small downtrend, not a very serious downtrend. If it is a very steep downtrend, then obviously you should be waiting for the next candle to be formed, right, for the confirmation. Piercings, there are a few examples of piercing strategies. The piercing happened in a downtrend and then market started going up. With little consolidation out here, market started going up. And some examples of RSI being here. Piercing with stochastic, another example, using, in this case, it's the other piercing, which is bearish piercing, right? Using stochastic here for the confirmation. If you use stochastic, then continue using stochastic and look for the other signal out here, right? Okay, before I proceed with the Tweezer and the very important one, any questions? Okay, how to trade like FII and DII? All right. That's an interesting thing, right? See, basically, you look at, basically there are two major trading styles, right? Number one is technical and number two is fundamental. If you're looking more, this FIs and DIs, they trade on both. Like mutual fund guys, they are more into fundamental, and a lot of these intraday movements, right, on FNO and other things, they use technicals. So for technicals, the key things are basically, there are two broad categories. One is purely price action, which we have covered in the previous sessions few weeks back. You can go and refer to those videos. What they typically look for is what we look for, right? Or what you can look for is the patterns, support resistance, and the idea is to use stop loss, right? See, you're not like a big FI or DI, right, where you can move the market. You being a smaller player, even if you put all your money in that, right, market may not move significantly. It may move a little bit here and there, few paisa up or down. But when FIA or DI comes, they can really make the market move either up or down. But again, when we say FIA, not all FIA think in the same way, right? The way we look at things, some may interpret a particular pattern as a bullish, some may interpret as a bearish. So what we have to look for is basically this pattern formation. If you understand these things, the psychology of the candlestick pattern formation, number one. Number two is basically key support resistance level and the other indicators, right? You don't have to worry about what FIA and DIs are doing. There's a small amount of money to be made in each of the moves, right? Provided you have a strict discipline and understanding of the pattern, right? Not sure if it answers your question. What is the best broker? Best broker, I don't want to comment on. There are a lot of good brokers. If you already have a demat account, then I mean, and if they are giving you good service, good. If you don't have a demat account, the best and one of the safest way of doing it is basically go to the account where you have a bank account. You may want to open with them. Unless you are trading very, very aggressively, like 10 times, 20 times a day, right? Or maybe more than that with huge amount. You can go for discount broking firms. There are quite a few available out there. I don't want to make A better than B. There are a lot of good ones available in the market, right? And there are a lot of internet research. Now you can do research on internet to see which one suits you better. I don't want to single out a one, but unless you are doing a lot of trading, right? I won't recommend you to go to this discount brokers. Go to the one which is along with your bank, right? It gives you better confidence. A broker along with the bank is far more robust than a small broker, right? Which is just based on this particular thing. So that's my 2 cents. Not sure if it answers anything in any of your question or not. But look for something which has a brand name and which has a backing by a big institution. For example, I'm not saying that HDFC Bank is a good demat broker, right? But it's a big brand name, right? So that should give you better confidence and better support system and other things. Or so few things. Number one is the brand name. Number two is basically who provides you better services, and those will be typical things that we and support. If you need any support, and then when you get stuck, support is the most important thing. So if you get the support, then that's the broker you should be looking at, right? For any of the product, if you don't get support, then you should be avoiding them. The other question is how to forecast gap up and gap down. Okay, that's very difficult task. Forecasting gap up, gap down is nearly impossible, right? Is nearly impossible. You have to see that and then react to that, right? But there are a lot of forecasting things which are available in the system, right? When certain pattern is formed, then chances of a gap up is much better. For example, we'll see some of those patterns. For example, Tweezer bottom pattern is formed, right? Or Tweezer pattern is formed, then there's likelihood of this thing coming. Otherwise, news are also source of a lot of gap ups. So watch news from a good channel or a good source. Perhaps that will give you a good indication that market is likely to gap up or gap down. But again, catching that on time is very difficult, right? Because even before the market starts, right, market would have moved to that level. So best thing is to try to anticipate during the close of the previous day how the market is moving. That would be a good point. Other question is how to who will give EMO, PMO? Yeah, I'm not sure if I understand that. What are the determinant of gap up and gap down? Abhishek, we have had a very good session on price action. I would recommend you to go into those sessions. It's recorded and live in YouTube. We have quite a few strategies on price action and gap up, right? So I'll recommend you to do that. We have covered about 20-30 minutes on gap up and gap down. So that would be a good session for that. So this pattern that we are taking now is Tweezer. Wow, this looks 4.5. So this looks like a lot more powerful one. Again, it's a 2 candle. Best thing is it is at the end of the trend, either downtrend or uptrend. In this example, what we have taken is a downtrend, a bullish Tweezer, wherein a long green candle is followed by a long red candle, both getting formed almost at the same. So if you ignore the color, both the candles should look like pretty same, right? If you remove these colors out here, these two candles will look pretty much same. Why this is powerful and how to use it, we'll see that in a while, right? So basically what it tells you is, we have one example. The price is in downtrend. You have a long red candle followed by long green candle. So if you see, it is forming in under downtrend. So if you see this one, this particular candle, it's a long red candle, right? That means the general thinking of the market is that the price is going down, and it has really gone down. Next day, almost at the close of the previous level, market opens. So the general thinking would be that market is in downtrend, right? But at that same time, bullish comes very aggressively and take the market from that lower level all the way to up level, right? So completely reversing the trend of the previous trend, and they are taking it higher. So this would be a typical tweezer forming at either a downtrend or at a uptrend, right? Depending on the shape and the size of the color. And then this is a very, very powerful one. So this is a completely reversal pattern, right? If you want to enter, you can enter immediately after this thing or wait for a confirmation candle, and this is likely to give you a very good move. Now, does it happen very often? The answer is no. And it's very difficult. It is very difficult to go and look at the different charts to look at. So that's where TSR comes into play. I'll give you an example of a tweezer pattern, right? Let me go with the simple one first, right? Pre-screened. I go into chart pattern screener, go to bullish tweezer, okay? As we anticipated, right? This is a very rare pattern. Let's see, in the blue chip, there's hardly any stock. Look at NSE 500, there's one stock which is coming, okay? When you look at this particular pattern, right? So it is coming down. There's a big red candle followed by a green candle, right? Had this formed little bit down below here, it's even better, but this is good, right? So again, it's coming with good volume, as it suggests here also in the previous one, and it's coming with a good volume, right? It's happening in downtrend. Obviously the tweezer happens in uptrend or downtrend. So this is a good pattern. Trying to look at just opposite of it, of a bearish tweezer, okay? In NSE 500, this is a Ramco cement, right? Which happened in the previous trading day. So when you look at this, right? So this tweezer has happened. So it is uptrend, a green candle followed by red candle, and the market is likely to, so if this were to be true, the market would come down here, right? So quite a few different kind of things. I'll also use this as an opportunity to show you one of the other things. So some of the patterns. So out of the 500 stocks, right? There's a zero pattern on the bearish, and there was only one pattern which is formed in the bullish pattern, right? How do you see occurrence of these patterns? What you can do is go to back testing, historical pattern finder. We'll create a strategy, tweezer, right? And then we go to bullish pattern candle, and we'll go to where's tweezer is here, right? Also we add one more, tweezer, save it, run it on, let's say, Nifty, on EOD 0101 200 2020, so let's say 01012023. So in last 3 years, how many these patterns are formed, right? Let's see. It is scheduled. Let's refresh to see the results have come. The results have come. So you'll see that there's hardly any tweezer formed. Only one tweezer was formed on 15th of September. So the rarity of this pattern is very, very low, right? In about 3 years, the range that we have selected is 3 years range. Only one pattern is formed, that too a bearish tweezer. Let's see how this particular thing is. 15 September 2022. Let's look at the chart. Go to Nifty. Right. Yeah. See here, right? A bearish tweezer was formed and the market indeed came down, right? So basically what you need to do is you need to spot a tweezer almost, so if it is bearish or near the uptrend, two strong candles just opposite each other color, and then so basically these are certain things, right? How do you predict gap down? These are certain indicators. You can't predict a gap down or gap up, but these patterns, right, generally goes with a very strong movement on the other side. For example, if you see, this is sort of a bullish tweezer, right? Again, there's a gap up here, right? So some sort of consolidation and market is moving up. This is nifty. Gap up, gap downs happens generally in high volatility market, and when there's a lot of either local factors are affecting, or macroeconomic factors, global factors are affecting, or news on a particular stock, right? Or during the quarterly results also, the things. So getting back into this thing. So this is one tweezer bottom, right? Another example, tweezer top, right? Is a right. So basically uptrend, two candles opposite color, almost same size, and then market has come down. Okay. So I hope that it's a very powerful one. I want you to really understand it well and use it. Okay. Before we go into kicker, let me see if there's any other question or comment. Name the broker who will give. See, this session would not be, I'm sorry, Speedy Info. This session will not be for the brokerage firms, right? I mean, it's more on the concepts and how to use it. There are a lot of good materials available on selecting a particular broker, right? So perhaps we'll use it, or you may want to refer with your friends or basically your mentors. What is rising support line? Please explain, sir. Yeah, Lal sir, I remember you were there in the previous session also, right? Rising support line we have covered in price action session a few weeks back, and we'll have another session on 18th of March where we'll cover a lot, not only the trend lines, but we'll cover other patterns like head and shoulder, triangle, channel, and so other patterns also we'll cover. Okay, so my apologies here of not taking trend lines out here. But it's covered on the session which we had in January, and there'll be another session on 18th of March. That's where we'll cover all those things in greater details. Okay. The next pattern in action is kicker pattern. Kicker pattern, the reliability is pretty good, right? What it tells you is you have a candle of a pretty decent length. Next candle is just opposite color and with a small gap up or very small overlapping. So just looking at these two candles, right? If you see the psychology, the market started here, it came down, a lot of pessimism. Next day, just the opposite trend has again is there. The market started almost at the same level as the previous day and gone into the opposite direction. That means the sentiments are just opposite. So just looking at this pattern, this looks like a pretty good pattern, right? What really decides about the quality of this pattern is the size of the candle, where it is formed. There are certain examples which we have mentioned out here. But even if there's an example or two less out here, just go with the flow of this session of how to identify a particular candlestick, how to understand a single candle, and if it is clubbed with another candle, it should give you a lot better confidence. Right? Kicker at a downtrend, right? If you see it was a downtrend. There's a bigger candle out here with a small gap up that should give you a good one, right? Results. Again, look at the other things. The trend is down. You have a swing high. That's where the support is, right? We should be getting better examples than this. Let me see. Before we go there, let's see another example of this thing. It is a kicker that we have in this system. Going in there, go to candlestick pattern, kicker, bullish kicker. Okay, there's no pattern out here on the daily. Let's go into the previous stick. Okay, there's one. Let's look at NSE 500. There's quite a few kicker pattern, right? Which was formed on yesterday. So let's look at them, right? So kicker was formed here. That's one. Another example is here, right? This example is giving better results, right? Another example, right? So this one is good, right? So this would have given you a pretty good results. This one again a very good result, right? So what you should be looking at is kicker with jump in volume, right? With jump in volume, that should give you, so this example, if you just go with jump in volume, right? So these are few examples. Also found in downtrend, that should even give you better. So jump in volume, even though market was low, it didn't, this completely outperformed the other stuff. Another example, not a very good example out here, perhaps stop loss. This one is a good example, and so on and so forth, right? So you'll see that the kicker is formed, a long green body, small gap up kind of a thing, and then market is moving up with good volume. So this would be a typical way of looking at it, right? Again, you can go to DIY screener and look at it. Stock basket of any choice, mid cap, long, small cap, you can look screen on any other things. For example, if you were to look at mid cap, there was one. Again, the rest of the things are not looking so good, so let's not look at it. Let's look at, or maybe at a later stick. No results. Small cap, there's one. Again, the rest of the things are not so good, so it should give you less confidence. But let's look at this thing, right? A kicker is formed here. Looking at the target out here, stop loss somewhere here, right? In the next trading day. Okay, so before we go into 3 candle pattern, let's see if there's any comment or question. All right, no new comment or question. So let's proceed. 3 candle pattern, similar to 2 candle pattern. 3 candle pattern uses 3 candles. Individual candle can themselves be a pattern, but a combination of 3 candles should give you better confidence in terms of getting into trade. Okay, number 1 is morning star. Morning star happens in downtrend when the stock is coming down, is by a red candle followed by sort of a gap down, right? A very small green candle at a lower level. So this level, the downtrend is still intact, right? If you see the downtrend is still intact, closed here, and this is closed here. So it is closing below the previous red candle, and then there's a small gap out here in the body of the next candle, starts somewhere here, goes all the way up. What it tells is downtrend is there. So there's a small amount of pause out here, even though the trend is down. The small amount of pause is there, some sort of resistance to the downward trend, right? It opened here, it closed slightly above there, and then next candle is starts above the body of the previous candle and goes up. So it's a 3 candle pattern. It's a 3 candle pattern, and this is a pretty reliable pattern, right? Morning star. Similar to that is another pattern wherein this one, instead of spinning top kind of a pattern, this is a doji, wherein there's hardly any overlap between the wicks also. In this case, if you see, there's an overlap with the wick, right? The wicks are overlapping. Here in this case, this is a doji and there's no overlap. Abandoned baby bullish. So that means the trend is coming down. This one is here. It's completely abandoned. There's hardly overlap. So abandoned baby. A small candle is there. That's where it's baby, right? And it's completely abandoned with the rest of the trend, and that is likely to go above. It's a 3 candle. It's a very powerful pattern. Another pattern, is a morning doji star. In this case, there can be slight overlap between the things. So if you see, these patterns looks very similar. If you have mastery over one, the rest of the pattern will be pretty much similar to the other patterns, right? In this case, there's small overlap in the wick, but still doji. The next one is 3 white soldier. 3 white soldier is basically 3 strong and big green candles followed by one another one, right? So what it tells is the bulls took the market higher. Again, they are further taking the market higher with another big green candle, and again they are taking the market higher with the green candle. That means there is a strong conviction in the market of the bull that market is going higher, right? So that's a positive pattern. Another pattern is Tasuki gap, relatively rare, not rare in terms of formation, but you'll not see too many of these things, right? What it tells is there's a good green candle, then there's a gap up, and then followed by a small red candle, but the red candle does not close below this price. That means what it tries to do is it tries to see that there's a small pause in the action, right, or small consolidation before the market is likely to move upwards. Okay, so that's bullish Tasuki. Another one is 3 inside up. It is similar to, if you see two candle pattern, right? This is bullish Harami pattern followed by another bullish pattern which closes above the previous high, right? So it is above this candle and closes above. So the entire effect of this is negated with the subsequent 2 candles. So this combination of these two itself is a bullish pattern, right? Followed by another bullish candle should give you better confidence, right? So this is 3 inside up candle pattern. 3 candlestick pattern strategies. We have morning star, evening star, doji star, evening doji star, abundant baby bullish, abundant baby bearish, 3 white soldier, 3 black cross. We'll see what those patterns are, right? So morning star, we are doing a deep dive with a lot of strategies out here, right? First thing is, it's a very bullish pattern, right? If you see in terms of the rating, this reliability, this is among the one of the highest reliable pattern, right? If you see out here, it is 3 candlestick pattern. Suitable time frame can be is daily out here, but you can look at the other time frame. Generally, if you see the gaps, right, gaps happens much lesser in the intraday period. Gaps happen generally when there's a pause in the trading, right? And the pause in the trading happens only in the and at the end of the day, or when there's a rare glitch in the market, right? That's only the pause happens, or there's a sudden move in the market, especially the announcement of the interest rates and so on and so forth, or budget like things. So morning star variations, one is a very simple one, which is a small spinning top. We have briefly touched upon these patterns, so I don't want to spend much time or take your time on these patterns, right? These are few different patterns which are formed, either bullish or bearish. So morning star is in the downtrend when there's a small body bullish candle, almost like isolated with rest of the trend. Just opposite of that is basically evening star, right? Just opposite of that is evening star. It's formed at the just opposite at the uptrend with a small red candle followed by certain gaps this side as well as this side. Doji star, morning, evening. Morning is because after in the morning things goes pretty good. In the evening things go dull, right? That's why it said evening star. Unless you are party kind of a guys, right? Then the evening is better for you rather than the morning. Then variation of this is abundant baby pattern, and just opposite of that is bearish and bullish, right? So these are combination of 3 patterns. If you see these patterns, they are and if you understand individual pattern, the trend or the other things, this will become much more easy to understand. Gaps are there and then gaps gets filled, right? Then it becomes a different pattern. So if you remember the session we have had on gaps, right? The gap is there, gap gets filled, then it's likely go in the other direction. So you can look at the price action way, you look at in the candlestick pattern, you look at the downtrend is over. So there are multiple different ways of identifying this. Again, not a very common pattern, but if these patterns are formed, then they can give you extremely good results, right? See the reliability is pretty high, right? 4.5 out of 5. Right, so one of the most reliable patterns out here. Any questions in understanding of any of these patterns? Stock selection criteria. See, stock selection, one of the best thing of looking at the stock is what is the volume and what is the value. So basically, value tells you that how much of money is getting in the trading of that particular stock. The higher the value, the better the market participation is, right? So you should always be looking at a stock which is trading at a high value. So maybe a stock which trades less than maybe 1 lakh or 1 million, you should be looking with little more caution unless it's a small cap, right? So value should give you better confidence that if the value is higher on that trading, right, or the average volume is higher, that should give you better confidence that lot of market is or lot of market participation is there. You don't have to worry a lot about it. Industry experts, they create a lot of index. One of the best index which is available in the market is Let's say if I were to look at a pattern, let's say bullish engulfing pattern, it's a pretty common pattern. If I have to look at something which is the best quality stocks, what I should be doing is I should be going in the more looking at the Nifty 50. These are the best quality stocks, right? You don't have to worry about filtering these stocks. Nifty 50 is the best quality stocks. So are the Sensex stocks, Sensex 30, right? If you want to, so again, the number of stocks are 50. So for you going and getting the patterns is much lower. What you can do is you can go, what you can go is look for Nifty 100, Nifty 200, right? Similarly, Nifty 500. So what we have done is, by default, you have few things: blue chip stocks, best of the 100 stocks available in the market. Future and option is about 200 stocks. You can go to mid cap if you want to trade in mid cap, small cap, NSE 500, and many more filters are available. So, so look at the stocks. If you don't know how to find it, trust the industry experts. They have created this for you, right? It's like mid cap is pretty much like Nifty mid caps. Small cap is Nifty mid cap. If you want to trade on a smaller quality stocks, then you can go to micro cap also. Where's micro cap? Yeah, micro cap 250, right? So you can go to micro cap stocks also, depending on what you are. How to check the value of the stock? Slight deviation, but I'll just take a small detour of this particular thing. Let me take you to the heat map, right? If you look at the heat map, what you do, it gives you a general idea that which stocks are moving up or down. There's another option out available here is index contribution point. That may be a little too complex for some of you, maybe some easy for some of you. When you look at the value, right, it'll tell you that which stocks are trading at the highest value. Value is basically the stock price multiplied by the volume. That gives you the value, right? So if you see Reliance has given the maximum trade, similarly you can go and look at maybe Nifty or maybe Nifty 200, right? So again, Reliance is trading is the most traded in terms of value, which is the stock price and the stock price multiplied by the total number of trades. If you just want to look at the volume, then what you can do is go to common screener, volume based. Then you can look at the highest average volume on any period. So when you look at this, these are the stocks which are traded at a very high volume, right? So Zomato is trading at a high volume. That means lot bigger market participation. Which basket we are in this basket, right? Tata Steel is trading at a high volume. Obviously, I'm sure you have heard certain news. Bharat Electronics, Scale, these are trading at a high volume. When you multiply volume with the price, that's where you get the value. Okay. Going back into this thing, any other question? BSF is giving candlestick. Okay. Thanks, Rakesh, for mentioning that. Okay. So Morningstar variation we have seen. Any questions on Morningstar or 3 candle before we go into? No? All right. Right. Reliability. If you just look at the structure, the reliability of Morningstar is about 70%. If you look at this is being a longer green and with bigger gaps, right? The reliability goes up. If you see a long green with good volume, the reliability even goes higher. We have never seen 80, right, till now, right? So this is about 80%. If you go and look at in the downtrend, just opposite of that, right? If you see evening star, right, other things. So depending on where it is formed, right, it should give you better confidence. So far, we have been just looking at the candles. When you add support levels along with that or resistance level with that, right, your reliability increases even more, right? Or if you mix a technical indicator, the reliability should go even more, right? So okay, so before we go into strategy, let's see if there's any morning star, evening star pattern which is formed out here so that we see in the real world. It's not a very common pattern, morning star. No records in NSE 500. Okay. Morning doji star, again no pattern. Abandoned baby bullish, obviously rare, right? Let's look at the bearish patterns. Let's look at evening doji star. Okay, we find few evening doji star pattern at the end of the day pattern, right? You see here, right? Latest Not a very good one, right? Again, not a great one. Evening star, no. Abandoned baby bearish, okay, right? What we should be looking at is a downtrend. So none of them is formed in a downtrend. So the reliability will not be that great, right? Reliability will not be that great. Sorry, uptrend, right? So the formation of pattern is not that great coming out here, okay? But this is the place where you should be looking at. Also look for these other additional information out here, right? Which will give you a better level of confidence. So morning start strategies. When we look at this, should be looking at the next candle confirmation, where it is formed, downtrend, uptrend, and so on, right? And other technicals like the RSI and other things. If it is formed on a downtrend, right? Morning star, so it's a downtrend, a small gap in the bodies. This is where the pattern is formed, and if you are aggressive trader, you might want to enter somewhere in the market looking at the volume. The advantage of volume is, right, even you don't have to wait till end of the day for the trading. Even at around 10 p.m 10 a.m 11 a.m, you can see that the volume is much higher than the previous volumes, right? That should give you a better level of confidence. With volume, it is going up. So aggressive traders can get somewhere in the trading time, or more conservative can wait for this pattern to be formed and get into the next candle, right? This is one example. Similarly, we have another example. This is formed at a resistance level, right? Formed at a resistance level. So double set of confirmation. First target is the swing low. If you're following trailing stop loss, then you can ride this wave in much better way, right? And then this is where you can exit either this point or this point. It will give you indication that low or high of the previous 2, 3, 4 candle, whatever you form, or moving average would also come somewhere very close to this. Okay, evening star, same stuff. In this one, the pattern is formed in the uptrend along with certain technical indicator like stochastic, right? So spot this pattern, spot the trends. If you are good in understanding some of the technicals, then you may want to refer to them as well. Abandoned baby bearish is a very nice one, right? So basically there's a doji. Doji tells you indecisiveness. So if you ignore this part, right? If you ignore this part, just looking at it, it's nice. A gap up here. It started with gap up, went all the way up, came down, and ended out at the same price, right? This is where what you should be looking at is basically you should add these stocks in the watch list, right? Next day, if it opens below this level, there's a gap down, then you should be watching. And if you are an aggressive trader, right? So if this was in watch list, and if you have put a price or basically alert below this level or around this level, then what you should be doing is you should be shorting at this point. Shorting may not be a good idea for everybody who doesn't understand, but this would be a good point. Had it been just opposite of it, I would have said that start. If you are aggressive trader, you should get in there. If you are more conservative, then you wait for the next candle, right? So it opens somewhere here, right? If opens here, in that case, put a stop loss somewhere here and enter into the trade so that it goes down. Okay. Then looking at this combination, this itself is a nice pattern. If it is coupled with, and the doji should not be with huge volume, right? Doji should not be with huge volume. The next candle should be much higher volume compared to this. So this is where the pattern is formed. The third candle is formed with good volume. In this case, it's the confirmation candle also gives you other signal. So it being in downtrend, obviously the RSI is likely to be in oversold territory. It is rising from the oversold territory, rising above 30. So you have other confirmation. And then once such confirmation is there, a lot of people, if you are an early rider, you could have entered here. Late riders would also come in and join the party. When they come and join the party, they're likely to take the market even higher, right? They're likely to take the market higher, and then there'll be more confirmation, more people will come in. 3 white soldiers is getting formed. more people will join the party, will further take the market higher, right? So what should your first target be? First target should be your swing high. But if you see that all the other things are conducive, no reason for you to book the profit. You may want to keep a stop loss of basically T minus 2, where T is the previous 2 candle, T minus 2, T minus 3 previous 3 candles, or so on and so forth, and then ride the wave, right? So this is where your stop loss would be breached if you use T minus 2 or T minus 3 concept. So ride on a nice wave, right? Use the trailing stop loss. First target being this one, then naturally the stop loss is there. And then where does it end? It ends in this pattern, right? If somebody understands this pattern, we have discussed the 2 candlestick pattern. This is a nice candlestick pattern, which is again a reversal pattern. Anybody wants to put a comment on there? What pattern is this? Okay. Then ignoring this particular trend, just think that this is a nice uptrend. This pattern is formed, and as expected, the reliability of this pattern is also very high. We have seen this a while back, and the market has come down actually, right? Okay. Then we have morning. So basically, what we have covered, right, is basically combination of 6 patterns or slight variation. They don't look much different than each other. They are all clubbed into one single family, right? One single family, which is basically morning star, morning doji star, abandoned baby bullish, and just reverse of this, right? So don't be very particular. Don't be very particular that I have to see a small body or this thing. Once you start understanding these patterns, right? Once you start understanding these patterns, then it's much easier to spot these patterns. Of course, filters or screeners like us will be very, very important. Screeners like us will be very important to help you to figure that out. We not only provide you the textbook patterns, but we somehow, we also try to fine-tune these screeners to match it with the real world, so that it give you a better quality of signals and better quality of this thing, right? So just look at these patterns, very, very powerful pattern. That's why I came back all the way back here to show you these things, right? Morning star, evening star, whether it is a small candle or whether it's a doji, whether there's a small gap, long gap, whether wicks are overlapping. What is important is this pattern to be formed and where it is formed, uptrend or downtrend. Very, very powerful and very reliable pattern, right? This candle, the length of this candle is important. The volume is important, where it is bouncing. If it is bouncing with a good support or resistance level, that should give you even lot more confidence with this, right? Rare pattern, but once such pattern is formed, you should not miss these opportunities. These are very, very good opportunities, right? So the idea, somebody was mentioning that which is a good broker, right? It's not about finding a good broker or this thing, right? Finding a good pattern where you can ride it. That is the most important thing. I mean, go to broker X or broker Y. These days, all of them are very good. You get the transactions in a split of a second, right? All the brokers provide. You put a trading. If it matches the condition, you get your transaction gets, or your trade gets executed in a fraction of a second, right? So don't have to worry. What is really important? What is really important is to be able to find these things, find these patterns, right? And how soon can you get into that particular pattern to ride the wave, right? Going back into okay, my colleague has suggested me to try out Sri Cement. Sri Cement, right? Okay. Oh, he is okay. Sorry. He suggested me to look at the comments, right? So let's see what those comments are. All right. How do we find candlestick in my watch list? Can I set the alerts? Rakesh, I'll answer both the questions. And other comment, sir, abandoned pattern formed on intraday 5 minutes. How to spot it? Okay. So I'll give you answer of both the things, right? Any other question? How to train the target? So targets would be important levels, right? Depending on what you are and where it is formed. If it is formed at swing lows or swing highs, swing lows can be good target. Trend lines can be another good target. The immediate target. Stop loss would be the pattern formation, right? If it is with gaps like abundant, baby, bullish, bearish, right? Then the third candle low or high can be a good stop loss to start with, and then you go with the trailing stop loss. Your first target should be swing highs. If there's no recent swing highs, then you can follow T minus 2 or T minus 3 candle, high or low, right? That will be a good point. Where can you spot these patterns? So if you're looking at abandoned baby, right, bearish, look at this one. So there are few patterns formed, baby bearish. If it is in downtrend, that's even good. Like for example, India Mart. If you look at India Mart on a 1 day, right? So see, this pattern is formed, abandoned baby. The pattern is formed here, and so this pattern is formed. But unfortunately, this pattern is formed during the end of the trade, right? So next day things can be very different. Next day things can be very different. But these patterns are a lot more visible when it comes to intraday or 5 minutes. Look at this example. This is a nice tweezer. This is sort of basically morning star, right? If you see, this is abandoned baby bearish, right? Market has come down. So the smaller the time frame, or this is a nice bearish engulfing, right? Nice bearish engulfing on top. Another bearish engulfing on top. Market has come down. So the smaller the time frame, the higher number of patterns you'll get, right? And it becomes, and especially for the practice, right, or learning, look for the smaller time frame. You'll see a lot more patterns. Like abandoned baby bearish, we could see here. Here we could see a nice tweezer is there, engulfing is there, right? So similarly, that kind of patterns, a lot of those kind of patterns will be here, right? In a single chart, we've seen quite a few. Let's see Nifty being the most commonly traded, right? See over here in a downtrend, there's a nice engulfing, and the market actually started responding. Nice tweezer, market came down on 5 minutes. Let's see, there's another this thing, tweezer pattern, market has come down. See on a 15 minutes chart, you'll see a lot of interesting patterns coming out there, right? So these things are there. The other comment was, how do you set alerts? So if you want to set an alert on a 5 minutes pattern, so you select this thing, select the screener, what kind of alert you want, which stock basket are you interested in. You want a web alert. If you are sitting in front of the machine, you get a web alert. You want email, you want SMS, you can set any of these alerts, right? Or if you want a specific time alert, for example, I want alert only at 9:30. After that, I have other business to work on. Up to 9:30, I have time to look at the market, right? So you can set alert at a specific time. So you can set alert at 9:30, right? So you want SMS alert, you can set alert, right? SMS alert. So this alert is set. Similarly, what you can do is for alerts, what you can do is you can mix certain indicators that we have just seen, combination of those indicators, whatever you think is a good indicator. So hammer, inverted hammer at downtrend, then you have basically kicker, tweezer, right? All these patterns you are looking to form, morning doji star, right? So what you can do is you can use any of the pattern is formed, you can set alert. You can set, you add alert over here, you can set alert on the screener, or if you want alert on a particular stock, then what you can do is you can add this alert on a stock itself. For example, you want to add a stock on, let's say, Bank Nifty, right? So you can set alert on Bank Nifty also, or on a stock basket, right? So you can set alert on any of these things. If you want on a watch list, create a simple watch list. We'll say candle pattern, custom watch list, add a field, go to, let's add something very basic first, right? Code, then we go into candlestick pattern, engulfing, we want gap up, we want Harami pattern, we want piercing, 3 white soldier, create a template. Candlestick pattern template is created. What do you want to go to daily? Let's add certain stocks. Let's add all the stocks of Nifty 100, right? So when you see here in your watch list, you'll see that whichever pattern you are interested, right? So let's say true. So Adani Greens, bullish Harami is formed. Ambuja Cement, bullish engulfing is formed, right? Similarly, there are other patterns which are formed, right? So basically you can look for that particular stock, what are the patterns formed, and obviously with this, what you can do is you can add other parameters. For example, if you want to add maybe trend strength, right? Trend strength, and you want to add, let's say, MACD, right? Update the pattern, look at the pattern. So what you see is the ACC, what pattern is formed. So there's no pattern is formed. The trend strength is generally bearish. This is our own indicator. MACD is whatever level it is, right? So you can create a watch list by adding any of the pattern of your interest. Okay, I hope that answers your question, sir. When you are introducing one, okay, Asif, I know you have been asking about 1 minute, right? We are working on that. We are working on that. If you see, there are a lot of additional patterns that we have done. Once we go there, we have to go almost like a complete thing, right? How do you find EMA is crossing the other EMA? Of course, this session is not on EMA, but I'll give you a very, very simple way of doing it. Next week, if we have time, we recommend you to basically join the next week's session. That's where the strategies on EMAs are. So it is cross above previous MA. So when you run this screener, okay, 50 cross above, let's say 200. Okay, so Suprajit Engineering, right, has the crossover has happened. 50 has crossed above the 200 moving average. So this is how you can do the screening of any moving average crossing above any other moving average, right? Without spending much time on that, on the moving average, let's get back into the candlestick. So briefly touched upon all the important aspects, right? What is the entry point, what is the target, stop loss, and where should you be avoiding it. Similar to this, you have 3 white soldier. The reliability is pretty good. 3 candle. What it tells is 3 consecutive green candles being formed with a decent body range, right? The best thing is during the downtrend, when the trend is over, there's some good news or good expectations coming out from the stock. The stock starts moving in one direction with strong bodies, right? It has basically both the sides. So if this extremely long body, then with 3 long body, then perhaps the move is already done. In such case, what you should be doing is you should be using a much more moderate stop loss, right? But three white soldier when it is formed at a downtrend, that means 3 green consecutive green big body candle, then that's a very, very bullish signal. 3 white soldiers, just opposite of that is 3 black crows. When you see 3 consecutive red candles, that is called 3 black crows, right? If you want to know about all the patterns and if you find that session going a little fast, what we have done is we have created a small tutorial out for this one. Go look at the tutorials. In the tutorials, go to chart pattern, candlestick basic, right? So it will tell you very basic about the candlesticks. Number 1, right? How the candlesticks are, how do you understand candlestick, what are the advantages, disadvantages of candlestick. Then there's another slide that we have made, or the team has made, is basically all the bullish candlestick patterns in one place. A brief write-up, a detailed write-up if you want to understand it a little more, the screeners, the reliability, what kind of pattern it is, how many candlestick pattern it is made of, right? So in one glance, it will give you an idea. It will give you an idea that, so suppose after this session, right, if you forget that what was Marubozu, right, just looking at it, you'll get a reminder what is a morning star, what is the piercing or engulfing, right? In one glance, you'll be able to get a lot of information out here, right? In one glance, all the patterns which are there, 1 candle pattern, 2 candle pattern, 3 candle pattern, 4-5 candle pattern, multiple candle pattern, or the patterns are mentioned here along with their reliability, right? Some of them are highly reliable that you should be focusing more. Some of them are less reliable. Some of them are single candle, some are multiple candle, so on and so forth, right? Similarly, bearish candles are here. Look at the bearish candles, right? So those are all mentioned out here, right? All the patterns are mentioned out here. So have a look at this. This is again something which will help you both from screener perspective as well as understanding. If this session was little too complex or too fast, or basically, then you can always come back and look at these candlestick patterns, right? So just opposite of 3 white soldier is 3 black crows, right? Let's take an example of 3 black crows where it is formed, right? So basically 3 white soldier formed at downtrend, bouncing from this thing Bollinger Band, right? Bouncing from Bollinger Band, get an entry here, a nice uptrend is formed, right? If you see that if it is already in the upward movements, right, then give yourself, don't rush to exit. If you're doing purely from this, market does retrace back. If it goes into extreme overbought territory, right, then it retraces back and then again gives movement, right? So such a stellar move is likely to give you a small pullback, right? So if you're looking at this thing, the 3 white soldier, right? So try it, and such a stellar move, if the move is much more aggressive, what you should be giving is much bigger stop loss, because if the market goes volatile, then it's likely to retrace back a bit, right? See the volatility from volatility perspective, the volatility is very low here. It's becoming, this band is becoming wider, and at this level it is the widest, right? So when volatility is very high, right, then the stop loss, I mean, if you're looking at slightly longer term, looking to ride the bigger wave, right, then you have to keep a much bigger stop loss, right? Looking at this again, keeping a bigger stop loss can wipe off your profit. So be very, very clear in what you're looking for. You're looking for scalping or a swing trading or a slightly longer term move. Okay. Another example, 3 white soldier clubbed with RSI rising from oversold zone, right? So again, a very nice move out here. 3 black crows just opposite of 3 white soldier is 3 consecutive big red candles. Best formation is when it is in uptrend. So it's a clearly trend reversal, right? You have good entry points and the market has gone down, right? The exit point, depending on how you work on. If you are T-2, T-3, perhaps you would have booked profit here, right? If you are looking at swing lows, then perhaps this is the level where you would have booked profit. So depending on what you do, what your trading style is, you can look at one of these things. Another example, right, with stochastic, right? Looks like the team has produced a lot of fun stochastic. So one of the sessions would be coming on stochastic indicator. Very, very important indicator, stochastic. So hopefully we'll have a session on that sometime in around March or April on stochastic. It is one of the smartest one if you're looking at a very, very quick move. The most responsive indicator available on technical is stochastic indicator. So stay tuned for our session on stochastics. Now we have seen 3 candle, 1 candle, 2, understood basics of candlestick pattern, 1 candle, 2 candle, 3 candle formations, price action. Any questions on that? So before we move on? No, Maya? Okay, great. Now multiple candlestick patterns, right? These are slightly more difficult to comprehend, but if you go in a very small organic way, even if you don't understand these patterns at this point of time, it's fine, right? These are slightly more advanced patterns. But once you start understanding what a candlestick is, what a red pattern, what a green candle, what is gap up, what is basically combination of 2 candles, 3 candles, 4 candles, right? Then these things you don't have to really basically work very hard. They'll come very naturally to you once you understand it, right? For the folks who've gone through the gap session, there's a gap up. If gap gets filled, then it goes into much more aggressive direction, right? So looking purely from the gap perspective, you could have, may not need to know what this island pattern is, right? Uh, Island reversal pattern, or bullish or bearish, right? Look at this. So this is one of the pattern which is island reversal pattern. If it is formed with two gaps, one is gap up and the stock is trading in that direction, think this from a perspective that there's something good likely to happen. There's a news or rumors which is happening, product is about to launch, some company is about to launch something, so gap is there. I'll take a very loose example, it has nothing to do with this, right? For example, one of the company has launched application called chat gpt, right? Another competitor tried to launch a similar thing. So when there's something which is there that is about to be launched, so there's a lot of curiosity that the product is likely to be good, there can be a gap up. When such thing is there, the market is going up. But when the results of that new product is not so good, right? Think about it, the product is not so good, it's likely to give a gap down, right? Or there's a lot of this thing, basically disappointment, the gap down is there, right? So think that that has a this thing. For example, automobile company is launching a EV vehicle on this date, there's a lot of expectations, the price is released, price is aggressive, people, there will be a gap up. There'll be a lot of euphoria around here. When the product is launched and product does not look good, or it does not have, or it has a technical glitch or something, it will immediately come down, right? So one of the example was like Google launched GPT, this thing alternative, right? It didn't turn out to be good. There was certain glitch. The market immediately reacted to down. So it's not like an example of Google, but I'm just trying to tell you that what are the typical things which will happen. So understand it from candlestick perspective, understand it from gap perspective. This is one, if this pattern is formed, is extremely powerful pattern. It is combination of multiple candles, combination of multiple candlestick patterns, right? If this is formed, it's very reliable pattern. We have a screener for this in TSR. Another one is breakaway, right? So what's happening is there's a gap down, there are few candles, a candle is getting formed, continuously making lowers, right? And then there's another candle which is a pretty wide candle, breaking away the initial trend. The initial trend was this, it's coming down, so basically it's trending down, low. Then another big green candle is coming and negating the effect of not only these candles but even the prior candle to which this was a black candle or a red candle, that is going away. So once you understand the psychology, or once you understand the pattern formation, right? There are a lot of patterns, there are hundreds of patterns. What we have covered is about more than 50 plus patterns in TSR. Once you understand these patterns, you can use DIY screener. What those DIY screener is, if you look at this one, there are certain patterns which are formed out here. If you look at bullish breakaway, right? A bullish reversal pattern. So how do you make, once you start understanding it, you can create your own set of patterns. You can create your own set of patterns using our OHLC compare. We have covered OHLC compare in extreme great details using the price action session, right? So just go and refer to that. Another session where we have covered OHLC compare is in the product introduction, right? So play with the system, you'll find really nice patterns. You can see that what is the latest pattern, how it is related to the previous pattern, the previous 2 patterns, 3 patterns, 4 patterns. You can create a very complex set of patterns out here. When you see the results of the breakaway, that it's out here, right? So if you this is one, there's another one which is the trend is coming down and there's a proper breakaway, right? Of course, this is too big a candle. You'll not, in the real world, you'll not see the candle. Even if the candle was somewhere around here, it would have been a good pattern, right? That is there with good volume. So you should be looking at something interesting happening on the next trading session, right? Another one, one is you can use, or you can refer to the ready-made patterns which is available here. Second is you can create your own patterns, right? So the restriction of 50, 100 candle is no longer there. You can create any of the 1,000 patterns. You can create your own pattern which you feel that this is a good signal. Go do the back testing. You can use the back testing also out here to look for the patterns, or you can use one of the ready-made patterns out here, right? So this is another pattern which is breakaway. We have seen a small example of this breakaway. it's coming down, breaking away a wide candle, breaking away not only these three candles but the uh, a prior candle with which this pattern was created. Similarly, a three line strike, right? Bullish three line strike. There are three big candles followed by a big red candle, right? And then so this is again a important pattern. Reliability. I won't want to go into details of every such pattern. The reliability is mentioned out here in this page, right? Not everyone. If you see, there are screeners and tutorials in public view. For some of them, the write-up is not yet ready. We have created the screener for all the premium users, all the screeners that we have mentioned. We have all the patterns that we have mentioned out here. We have a screener. For some of them, we do not yet have the reading material. So stay tuned. We'll be enhancing this thing to add almost all the important patterns for both screener perspective as well as tutorial perspective. But you'll definitely see the reliability of these patterns right out here. Another pattern is Hikkake pattern. Looks little complex. I don't want to go too deep into things, but each of these patterns tells you that the last one, apart from this island breakout, the last pattern or the last candle has to be a big candle, and it is trying to somehow find a sense out of the previous few candles, right? Previous few candles, if you see, they look pretty much similar, but the combination is different. In this case, it is formed after a bullish, after a bearish Harami. It is coming down, then there are certain indecisiveness coming here. It can be doji or a small candle, indecisive, and then a very decisive candle comes out here, right? A big green candle comes out here. If this is formed at a resistance level, if it is formed with a good volume, even better, right? So not necessary that you have to follow this thing. This may not be Harami. If it is slightly lower, that's also okay, right? What you need to do, or what the idea of this session is for you to start understanding these candles, what is going or what could be happening. If you don't understand these candles, or basically Hikkake, right, what you should be seeing is a small sort of consolidation happening followed by a big move. If this is jumping from a support level, brilliant, right? If it is in downtrend and something is happening, consider this as consolidation. If you understand this pattern, obviously we will give you screener results. Let's see if there's any screener results for Hikkake pattern. Let me have a sip. Okay, let me reset this. Go here. Hikkake pattern. Let me take a sip of water. Okay, so let's see if there's any pattern which is getting formed. No pattern. All right, so below belt hold. Okay, so we see few pattern below bullish belt hold, right? So play with this thing, right? What it means is it's explained well over here, all these patterns, right? So with belt, right? This pattern is formed, right? There's a gap up followed by a this pattern, right? So that's what we were trying to figure it out. So I don't want to go too deep into the details because we are already past the time. But the key idea is to give you a quick idea about the concepts of more than pattern finding, right? Once you understand this pattern, then there are a lot of things when you look at the chart. There are a lot of things that you can make sense out of it, right? Again, the patterns, multi-candlestick patterns, we have briefly touched upon. Bullish reversal pattern, one of the most reliable pattern. There's an example of bullish island reversal, bearish reversal. There was a gap up. Which stock is this one? This is Nifty, right? So again, so there was a gap up. It continued for some time. right? And then there was a gap down and the market really came down. So nice uptrend, gap up, some sort of consolidation. There was a lot of hope that something good is happening around here, right? It almost touched all-time high, couldn't sustain. Then with sudden gap down, it came down. Now, if you just change this, if you just change this to a weekly chart, right? Think about it. Just change it to a weekly chart, perhaps, or maybe 8-day chart or 9-day chart, right? You'll see this pattern is getting changed into a weekly abandoned baby bearish, right? So if you understand this, how you relate things, it's not very difficult. You don't always have to look at one time frame, right? You see, if the length of the candle is about this much, right, then this will be a sort of a small this would be sort of a small candle, right, on an uptrend, maybe a evening star, abandoned baby bearish. So that's how uh, at the end of this session, right, what you should be looking is how to make sense out of these patterns. These are very, very powerful and very simple. It may require some sort of this thing practice, but once you practice these things, right, then there's a lot of money to be made. If you mess up with these patterns, if you go mechanical with this, then there's a lot of money which you can lose. You can easily become millionaire if you are a billionaire, or vice versa, right, depending on which place you start with and how good your strategy is. All right, so that was an example of island reversal. Hikkake pattern clearly tells you that it's in downtrend. So it's a continuation pattern. It's going up. Then there's some sort. So it's going up here. There's some sort of consolidation or a pullback, typical pullback, and then again such a pattern is formed, right? So there's a let's see an example. That will be a good example, right? So it was an uptrend. There was a Harami pattern formed, some consolidation, and then the Hikkake pattern gets actually completed above this level. So it's a continuation pattern. Aggressive, get in here. Otherwise, wait for the next candle, and then you can ride this wave. Okay. I think that's about most of the patterns. We'll see what other things are, and let's see a question or two. How much color of a candle is important in pattern? It's very important. Sumit, so basically red and green, right, tells you a very different story. Red can, if it is a small candle, hardly matters, right? Over here, it hardly matters, right, because these are very small. But in such case, right, if you are here and you get a sort of a slight variation of a Marubozu, right, a big candle. If this is red, then perhaps the trend would be towards the downtrend. If it is green, the trend is uptrend. So color really matters a lot. If it is consolidation, it matters relatively less. Of course, each of these patterns have certain guidelines that this should be a small Harami pattern, then this should be a small patterns. Red or green really doesn't matter that much, but the general sense should be that it should be within this range, and then breakout happens. If this is red, then it's not a Hikkake pattern, right? It starts from here and ends here, so it's not a pattern. So the color really matters a lot. Okay. Then going into these patterns, we have briefly touched upon. These patterns are readily created. Initially, we wanted to give you OHLC pattern maker to give you for you to create these patterns. But there were a lot of suggestions that why don't you create these patterns, especially in the price action session, right? A lot of you told us that why don't you pre-create these things. Tweezer was one of the example, right? You pre-create for us. So what we did is we pre-created these patterns, right? For example, Tweezer, I don't know if there's any pattern available here. Bullish Tweezer in C500. Okay, there's one in bullish in downtrend, right? Let's see. Orient Electric, right? So it's a downtrend and there's a nice Tweezer pattern. So some of you found difficulty in creating these patterns using OHLC, right? So we created these patterns readily available. You can go do the back testing, go to previous candles, no records, right? So the more history you go to, right, the better your confidence you get in a pattern, right? Better confidence you get in a pattern and the better trade you can make. Similarly, what you can do is you can go to DIY screener. Over here, you can add, you can create your own patterns, right, using OHLC compare. These are nothing but going and creating certain candles, right? Going and creating certain candles. So you can use this thing. Few examples which we have created ready-made for you is basically morning star. You see any pattern? There's morning star out here, morning star in a downtrend. Or if you look at this thing, right, morning star, if it was in a downtrend, that would have given better results. Again, nothing in downtrend, so reliability is lower. Look at maybe engulfing, quite a few engulfing pattern, right? So this one looks like a good one, right? Downtrend. It's engulfing, also sort of a variation of a pattern which we discussed, right? So you can do that. Sort of a morning star, a variation. So this would not have come in a morning star, but when you start looking from this perspective, this may look like a morning star downtrend, nice downtrend. All that you need to do is, if there's a gap up from here, right, this looks like an island reversal, right? So that's how you should start looking at the pattern. So if it opens out here and it continues straight in this direction, maybe it's an island reversal. So that's how you need to spot these patterns. You need to preempt what could be happening in this, right? So for you to ride the wave in much earlier. Obviously that requires a lot of time and concentration. So if you don't have time, then put an alert that if it really opens out here, then this would be a good island reversal pattern, right? And then what you see is that if it is continuously above this level and with good volume in the next candle, which is forming in the next day, right, then you can be the early rider of the moment. You don't have to wait for the pattern to be completed. Okay, so pre-screener, this thing is there, multiple pattern we have seen. You can create your own patterns. You can use so along with engulfing, if you want to see any other thing, so what we have done is okay, so let's reset this, go engulfing. Along with engulfing, if you want to see that the price is above a certain moving average, for example 50, so it gives you a combination of both. Number one, engulfing, and the price is above a certain moving average, so price is definitely above that moving average, right? So you can mix and match. On top of it, if you want to see that for example RSI is above, let's say 70, right? So above 70 is a bad idea. It should be below 30. Maybe that should be a better idea, better strategy. No records. Okay, below 40. Okay, no records, but that would be, so you know how to mix and match. We have covered technical indicators, we have covered price action, right? We have covered candlestick, so you know how to make best use of things. Okay. So build your own strategy, right? Traders eye view, we have briefly touched upon in the previous sessions. Won't want to go here to bore you with the same set of information. I will recommend you to use those things. Historical pattern finder, this is something new. I don't want to so this is something new. So basically, as far as back testing is concerned, we are going for a suite of 5. One is the time machine. You can go back in the history. The other 2 we have created is back testing and historical pattern finder. That's something which we discussed. We created one such thing here, is yet to be released to the general public yet, released for the clients. It's still in the early phase. We are doing little more basically testing. For example, if you want to create a pattern, 1D pattern, one day pattern, right? What you can do is you can choose 1-day candlestick patterns. You can choose Doji, hanging man, all these kind of things. Save it, run it on a stock, let's say Nifty, or maybe we have used Nifty quite a few times. Let's use TCS, right? Go for a period. You can go for a long period. You can go for any tick, for example weekly tick. Go. So between this period, right, first January 30 to this thing, how many patterns are formed? Generally is very fast. I don't know what's wrong. Okay, something is wrong. with this one. That's why it's in beta. Okay, completed. The results are out. If you see, there's only one hanging man net uptrend formed on Nifty on a weekly chart. TCS on a weekly chart, hanging man. That was on 14 January 2022. Let's look at that. Go to TCS weekly chart. '22. Yeah, 14 Jan, right? So this is where the hanging man was there. So you can go back and look at it. This will be a good opportunity for you to learn, go back in the history, look at things. Hanging man is there. The next candle is down. So the trend is coming down, right? So when you look at this, so basically after that pattern is formed, right? So there's a confirmation out here, and market indeed came down, right? Market came down, and this would have been a good profitable trade. So it will help you to brush up some of your skills, use our filters, use our tools to make best use of your hard-earned money. Backtesting, time machine, which we have covered one of them, right? So that was pretty much about what we wanted to cover. I know it was a long session, right? You can add alerts. We have briefly touched upon alerts. Watch list, we have briefly touched upon. Custom templates, we have had a separate session on that, right? So learn candlestick pattern in this thing, TSR. So that's what this particular slide is, right? You get to know a lot about candlestick patterns. Trust me, guys, candlestick pattern alone can give you a lot of results, right? Tells you a lot of information about the charts and other stuff. Like everything, there are certain disadvantages of everything that you do. Candlestick patterns, some of them are pretty straightforward, some of them are patterns, right? So not every trader would interpret in the same way, right? Same pattern people can interpret in different ways. Some people see that as a downtrend, some people see that it is a uptrend in a longer trend market, right? So that's something which we have discussed in depth in one of the previous sessions. Can give you false signals like any other things. Any other technical indicator or chart patterns, this can also likely to give you false results. We have seen the reliability. None of them indicators we have said that give you 100% results. 65% of results is considered to be very good. If it gives you 65% results, it gives you very results. If somebody says that they can give you 90% results, then you know what to do, right? On that, we have had discussion on that. So a lot of things are there. A lot of advantages, disadvantage are there. So use your best judgment with all the skills that you have, with the tools support, do it. So that comes to pretty much in the conclusion. Like always, guys, we are here to share the knowledge, but at the same time, the motivation level that we can have is only with your support and with your blessings. The blessings can come in form of like, subscribe, hit the bell icon, right? That will help the team to be motivated, and will promise you not only with good sessions but also with the continuous improvement in the tool. Like in one of the previous sessions, some of you suggested to create a pre-created patterns on the Tweezer and other things. We created it. We have not only created the patterns, we are presenting the session. So definitely we are looking forward for you guys to share this thing, like, subscribe. That will help to motivate. The team has worked very hard. If you can, it is evident. It's going on for 2 hours plus. A lot of examples team has gotten, presentation. Team has worked hard in creating this screener. So your like is at the minimum. We are expecting you to give support and also share the tool. The more number of subscribers that we get, the more enhancements and more innovations will happen in the tool. Obviously, we believe that the suite of the candlestick patterns that we have is one of the best, not only locally but globally. Not too many providers or patterns are having so many patterns. Our idea is to add more patterns, and make it more user friendly. That is one of the tasks that is there. Once the product gets complete, then it is more about the making it more useful to the users, right? That we are working. So definitely your support will definitely help us in improving. So do share with your friends, subscribe, like, and do uh, uh, share your feedback, right? If not in this session, what you like to have. One of the feedback that one of you shared, of course that gentleman is not in the session today, is more of a moving average guy. He has shared feedback which we have implemented it and will release next week along with the next session, right? So a lot of your feedback, we take it very, very seriously. Some of them which we can do it easily, we'll do it. Asif, I know you have been asking for a lot of feedback. We have incorporated few of them. Some of them are still pending. We are aware of that. It's not that we are neglecting, right? It's just that we are taking time step by step. So stay tuned. You'll see all your feedbacks coming in there, right? All your wish list coming in there. All right. So with that, guys, I'm signing off unless there's any other question. So again, thank you very much for staying till end of this session. I know it was an extremely long session, taking time out, especially at the same time when India-Australia match is going on. I know it like for a true cricket fan, it's not easy to do. And also some of you would be fasting on today, celebrating Mahashivratri. So very much appreciated, right? Staying so late, taking so long time on such an important festival, right? Hope to see you soon next week with moving average. We'll try to have at least 2 sessions per month, 2 Saturdays, whichever Saturdays we can produce good quality content. But for that, we definitely need a lot of your blessings, right? So do share with your friends, and thank you very much. So see you next week. Till then, tata, bye-bye.